It's nowhere close to that because it doesn't have the track record. It doesn't have the deep market size, market access. Remember, it's still heavily controlled markets in China. So to me, I think that yuan is something like 2.5% of global reserves. The U.S. is somewhere around 35%. And it's sort of we've seen this. It's like an iceberg melting. It's the dollar's dominance is falling, but it's at such an incremental pace that it's not something for you and I to worry about. I think it'll be for our kids or grandkids. But that said, the U.S. is still the leader.
Wait, hold on a second. Before we let you go, and we only have a couple minutes left, and I do want to get your sense on what ECB President Christine Lagarde said today. Do you think that it moves the needle that she came out and she actually confirmed that they plan to have no negative yielding or negative rate policies by the end of September?
Well, Lisa, it's the first time she's come out and said that. Other sort of more hawkish officials have already sort of laid out that timeline. But if you look at the calendar, a hike in July and a hike in September does take you basically to zero. And another hike in October and December, 2 hikes are priced in. And that's actually steady from what was from last week. So in a sense, it hasn't moved the needle on the rates market. The market is still looking for 0.5 by year end. Peak policy rate of 1.5% sometime over the next 24 months. But the euro has reacted. There's no doubt about that. So I think it's a knee-jerk reaction. We could get up above as close to 109.30, I think, which is a high from a few months ago. But I still look at this as a corrective move. I still think the U.S. dollar, the U.S. outlook remains the best. We're seeing a correction. We've had a huge move in the dollar over the last couple of months. But obviously, again, it's a bit about this pendulum of sentiment. Right now, this pendulum is moving towards the euro. But I expect, some of the truth is somewhere in between.
Right. Winston, thank you so much. Greatly appreciate it. With Brown Brothers Harriman as well. I think to go from Jason Furman to Dr. Thin and to our next guest shows the span of the debate here in Davos.
Especially given the realities on the ground. We talk about oil prices. We talk about the inflation and how it hits the middle class. This is also a big discussion of food insecurity here at the World Economic Forum and what that does to the social fabric of many of the developing nations.
I agree with that. I think the social issue this time around is this food inflation. The Economist magazine with our cover on food, the food crisis, really getting a nice play here as well. But so much of it is about the constraints that the international community has to the shock of war in Ukraine and the shock of what we're seeing in the markets worldwide. We will go to the source with Barry Eichengreen. I can't believe I'm saying this. 24 years ago, where Couter Houseman changed the dialogue of economics, and it is very evident today in the constraints that nations have amid this food crisis. Please stay with us on radio, on television, across America and worldwide. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. President Biden says he'll review Trump-era tariffs imposed on imports from China. That led to a rally in the offshore yuan. The Biden administration has maintained most of the tariffs imposed by his predecessor, but the president has come under pressure from some lawmakers and economists and the U.S. Chamber of Commerce to reduce or eliminate them. And President Biden is seeking to reassure Americans about the current monkeypox outbreak. At a news conference in Tokyo, the president said it was unlikely to cause a pandemic on the scale of the coronavirus. He said the U.S. has enough smallpox vaccine stockpiled to deal with the outbreak. And a plane load of more than 70,000 pounds of baby formula has arrived in the U.S. An Air Force jet flew it from Germany to Indianapolis. It's the start of an emergency program to alleviate a national shortage that has left some parents scrounging to feed their children. And in New York, police are searching for a man who shot and killed a Goldman Sachs employee on a subway train. Daniel Enriquez was 48 and had worked for Goldman since 2013. Goldman calls the death a senseless tragedy. An increase in assaults on New York's subway system has prompted Mayor Eric Adams to boost the number of officers on patrol. Bank of America is increasing its minimum hourly wage to $22. That's another step towards reaching its goal of $25 an hour by 2025. 5 years ago, the bank's base hourly wage was $15. Like a lot of employers, B of A is beefing up compensation and benefits in what is a tight labor market. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We are projecting a lower growth than we anticipated last year, 3.6% versus 4.9%. But let's remember, 3.6% is the average growth in the previous decade. In other words, we are still projecting to be in positive territory. We do not anticipate a global recession.
Kristalina Georgieva of the International Monetary Fund. I'll be doing a panel with her Deputy Managing Director, Gita Gopinath, here on growth, which is hugely anticipated. They said there was a feverish to get in the room. There's these big rooms here at this fancy place, and to get in the room to worry about growth front and center.
I mean, honestly,
right
that's what everybody wants to do. And what
Yeah.
are these, as you call them, muckety mucks going to say, other than, especially if they're heading major global organizations, other than to say, it's not inevitable that we're going to get a recession. There's still a lot of strength, which there is.
We're learning so much here. And Tang here is Tang.
Yeah, Tang. With the food.
Tang.
Yeah, exactly. He's drinking Tang. While we take a look at a world that is very much in turmoil.
Well, it is in turmoil, and what we're trying to do is lay the groundwork here. We're going to have Rebecca Patterson with us in a bit, talking about the markets. But we continue from Jason Furman and EC10 and on to WinThin Encyclopedic on the Pacific Rim, and someone that has been with us through the many years at Davos. Ricardo Hausman joins us now. The title is Practice of Economic Development Professor at the Harvard Kennedy School, but that barely describes his contribution to economics with Barry Eichengreen on original sin and also of his Venezuela. You and I, Professor, one historic day here when Venezuela was once again blowing up. President Biden is sending out solicitations to Saudi Arabia and to your Venezuela. Should he be doing that?
Well, I think that for Saudi Arabia, definitely it can be a game changer. The world is now concerned about not only energy security, but also energy affordability. The world wants to reduce Russian oil production. It would be good to have OPEC guarantee sufficient supply. So I think, Russia joined OPEC in a structure called OPEC Plus in December 2016. We need to get OPEC away from Russia. And one way to do it is to tell OPEC, look, We are going to restrict Russia's access to oil technology. We're going to restrict Russia's access to international financial markets. We're going to restrict Russia's access to oil markets. So we're going to make sure that Russia's market share in oil shrinks, but help us do it in a responsible way by you taking up the slack to keep prices relatively stable. So I think it's strategic to redefine the relationship with OPEC. I think Venezuela is not a player. Venezuela is not producing oil because they have destroyed the whole ecosystem to produce oil, and a little change here or there is not going to change the picture in Venezuela, and it's not going to change the picture of the oil market.
But to Tom's point here, is a little bit out of the fire and into the frying pan, or out of the frying pan and into the fire when it comes to needing oil that much more and setting prices up. Is there a more effective way for the West to go about this, to hurt Russia more than Russia is hurting the West?
Absolutely. You see, if you embargo Russia's oil and it cannot come out, then Russian oil production is going to come down. World prices are going to go up. The oil producers become richer and the oil consumers become poorer. And so it's a very expensive policy for, say, Europe. If you want a policy that gets what you want really is to get Russia's oil, but for Putin not to get the money. And the way to do that is you just tax the oil. Since Russian oil has to compete with Saudi oil or with Emirati oil, it will have to be more or less the same price, right? Except that one pays the tax. So for Russia, they would have to put a discount so large.
He sounds like a Trump advisor.
Well, I mean, this is the issue, right? That a lot of people are opposed to this. Why hasn't this gained more traction?
No, Secretary Yellen came out in favor of it, and she said that she was going to propose it at the G7 meeting. So it makes all the sense in the world, because if you're only taxing Russian oil, you're not taxing all oil. So Russian oil with the tax will have to compete with the rest of the oil. So a Russian oil after tax, the amount of money that Putin gets, is going to go down. And that's something that can be done now. Weaning Europe out of oil is going to take months or years, but the war is now. You want to harm Russia now, not in a few months or in a few years. So it's just smarter. In that world, Russian oil still comes out, so world oil prices don't go up, but the cash flow of Russia is hurt. So I think it's just a smarter way to wage this war.
You own the high ground with Barry Eichengreen of thinking about how emerging markets can respond in financial markets and also within trade flows in real economies as well. Should we be afraid now of emerging market fragilities given a pandemic, given a war in Ukraine, and maybe also given big economy irresponsibility? How fragile are they?
Well, I think that it's a mixed bag, so we can talk about individual countries. But in general, in the emerging markets, there's a lot of commodity exporters for which the current situation is a positive shock. They are either exporting oil or minerals or agricultural products, and all of those have gone up in price, and that's generating more income for the country as a whole. In a country, say, like South Africa, the net effect on the country is positive, but it's super positive on the government and negative on households. So you have a domestic problem of how do you do, what does the government do with its unexpected extra income, and how do you cushion the blow on households, because energy prices are up and food prices are up. They are producers of food and they are producers of energy, but still their prices are up.
I've got to squeeze this in. In the greater Caribbean, how do we promote democracy? You have been doing this for decades. Cuba, the Castro regime moves on to something new and different. The mess in your Venezuela. How do we promote democracy within the greater Monroe Doctrine?
Well, I think first of all, it's not a short fight. It's a fight. These countries are supported by the likes of Putin, and so winning in Ukraine is going to the extent that it harms Russia, it's going to harm Venezuela Venezuelan dictatorship and the Cuban dictatorship and the Nicaraguan dictatorship. So I think it's just a long haul, and we have to keep at it until we get to reestablish democracy.
That's what Elliot Cohen said in his article on statecraft and foreign affairs. We've got to got to it, make it for the long haul, and keep at it. Ricardo Hausman of Harvard, thank you so much for joining us today. Just don't get up right now. You're going to walk in front of camera 42 and ruin Heidi talking in front of the
He made such a good point there, though. Honestly, this idea of the government, it might be getting the money, but if it's not effective, it'll just be hurting the population. And this is where some of the social uproar is a big concern for a lot of people.
Economics course today.
I know, a Harvard economics course. So we're helping to bring it to you.
Constructive markets after what you've enjoyed the last couple of weeks, yields moving, but much more importantly, equities with a lift. Please stay with us. Next, Rebecca Patterson of Bridgewater. From Davos, good morning.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron.
Connection lost.
Many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There's a pervasive fog of negative sentiment out there.
When every single headline is negative,
it's time to buy.
I still think the dollar is going to be king in this sort of environment.
So the earnings are super powerful and stocks are cheap at this point.
The bond and the stock market are trading as one.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene from the meetings of the World Economic Forum in Davos, Switzerland. A very different Davos this year in May, not in January. And I've been stunned, jarred, Lisa, at the changes. I just did not expect the difference in energy, the ballet of a beautiful May morning.
Yeah, it's very different than tripping over the ice and dealing with snow and freezing. It's also a very different moment right now in Wall Street that everyone's assembling. And frankly, on the heels of the pandemic, a quieter Davos, but one that's also more serious and focused.
More serious like 2009, 2008, but different. You brought it up earlier, and again, we brought it up last week. It's not a Davos of catharsis out there or emotion. It's just the slog in interest rates and the worry about recession grinding along through this 2022.
And a changed geopolitical landscape really highlighted by the fact that Russia is not here and all that that entails. The idea that we have a very shifted landscape that we're looking at right now. What does it mean to be globalized in a world where people are trying to find how to get things quickly and reliably despite some of the disruptions?
And Joe Stiglitz has joined us as well. He was walking by me and he was deglobalized as we walked by here. Here's what we're going to do. We're going to, Lisa's going to brief you right now and what we're going to do, staggering through the morning and the next number of days. And then we'll take a quick look at markets that are quiescent this morning. What I would say more than anything, a euro edges up to a 107. Why did that happen, Lisa?
Because Christine Lagarde came out in a note, and she basically was saying that she sees getting to eroding the negative yielding policies by the end of September, and actually really taking a more hawkish tone, which is giving a bit of a lift.
No, I thought it was she ordered a double espresso at the espresso bar. 10-year yield 2.83% as well. And very seriously, Brent crude resilient 113, even 114. That gets my attention in global. Is front and center. What do we have ahead?
The food crisis up front and center, as well as how we're dealing with climate change issues at a time when gas and oil has new predominance. And frankly, people seem to be putting aside the ESG. Speaking on that, we're going to be talking with John Kerry, among the many people who are going to be speaking with the U.S. Special Climate Envoy and former U.S. Secretary of State, also the senator from Massachusetts, as you, of course, always allude to. Joseph Stiglitz will be talking about being globalized or deglobalized. We'll see which way he leans this today. Globally, Columbia University professor and Nobel laureate who will be joining us in this hour. David Rubenstein, Carlyle Group co-chair and co-founder, and of course, host of peer-to-peer conversations. But right now, the conversation, Tom, that we're about to have really sums up, can we get a reprieve from the 7 straight weeks of declines, the longest stretch going back to 2001? Is this, what we're seeing this morning, a head fake, or is it really the start of a buy the dip?
And it goes to the synthesis that we're in here, and it's the market coverage of equities, bonds, currencies, bonds. Rebecca Patterson has dealt in all those areas, and it's culminated after her work at Bessemer with Bridgewater, where she is chief investment strategist with a guy named Prince and Dalio as well. Are Prince and Dalio on speaking terms?
Absolutely.
Okay. What's the latest meetings like in terms of the volatility we're seeing, the complexities and nuances? What is the tone within your meetings as you assess this 2022?
Well, obviously, as you hinted at, Lisa, there's just so much changing now, structurally as well as cyclically. And so there's a lot of people saying, where are we going? Not just the next month or next quarter, but the next 5 to 10 years. If we do deglobalize or regionalize, what does that look like? What are the implications of that? As well as the short-term worries over will the Fed tighten enough to get inflation back down to its target? If we have higher, stickier inflation for longer, how does that flow through to the market? So a lot of uncertainty, if I had to sum it up.
How do you determine whether a move like what we're seeing ahead of the open today is a head fake or not?
Well, we don't trade daily wiggles in the market, so we'd take a step back and say, okay, what's discounted? A lot has changed since the beginning of the year. I think the biggest change has been discounted tightening by central banks, particularly the Fed, and we have seen that flow through clearly to the bond markets, and we have seen the equity decline so far largely a function of the change in discount rates. You haven't seen a major change in expected earnings growth. And so that to us is the thing we're watching. If this is a head fake or continuing, that would be the shoe to drop. If the Fed continues to tighten to try to reduce demand, to get inflation under control, I would expect to see that flow through into discounted growth, which then eventually should bring equities that next leg lower.
For years, people were saying that markets were benefiting even though the economy was not, and that actually we saw all of the financialization represented by an S&P on a vertical trajectory. Are we heading into the opposite? Can we be heading into the opposite, where we see markets lag behind an economy that continues to be strong?
Actually, that has been our view and continues to be our view as we look ahead, that we're in a situation now where the nominal economy is likely to outperform financial markets fairly substantially. And that is mainly a function of the policy reaction we got during the pandemic. You know, all the fiscal and monetary stimulus that came through and left households wealthier than before the pandemic, corporate balance sheets stronger than before the pandemic. It gives them a cushion to withstand the tightening. So it is going to feed through to markets. And obviously that wealth effect will also feed through to the economy. But that starting strong nominal point for the economy means financial assets could underperform.
You've got it, Bridgewater, in your fancy kitchen. They get the whole Sub-Zero thing, you know, like the big stove.
Well, look who's talking. Bloomberg Kitchen.
Hello. You've got the Ray Dalio Memorial pressure cooker. And the only reason he hired you is the steam coming out of the kettle is the currency market. To me, the conundrum here, and you beautifully described the fiscal impulse and the wealthing that occurred, and maybe the de-wealthing that's occurred now, what releases the pressure is dollar dynamics. What kind of pressures will we see?
Well, I think the most important thing to understand about the dollar right now is how quickly our external need for foreign capital is increasing. So if you go on your Bloomberg page, it'll show our current account deficit for the United States at around 3.5%, which is already a big widening. Our timely estimates suggest that's closer to 5 or 6% of GDP. And so for the dollar to stay supported, we need to continue getting enough capital to offset that. And we think there's a growing risk around that. So the dollar, we think, is vulnerable on a cyclical basis and also a structural basis.
This is important. It's Steve Roach 101. Someone has supported us for years here in Davos. And if we get a twin deficit, do you link those two together mathematically or philosophically? Do you link current account with recession gloom together, or are they two separate events?
Well, they are mathematically linked. As you know well, Tom, you're being humble. Yeah, you do. But I think what we're following...
It's like this is a tip, pro-surveillance tip.
Yeah.
Don't ask the question unless you know the answer. It's just like Judge Judy. Continue.
So the current account, the balance of payments is what I'm focused on relatively more. And so that financing need is the canary in the coal mine. If U.S. growth continues to outperform the rest of the world, if interest rates in the U.S. continue to be so much more attractive, both on an absolute level and on a change basis, then maybe the U.S. does continue to hold up for the dollar, but it's a question mark.
So where does the money go if it doesn't go to the U.S.?
Well, let's look. I mean, year to date, Japanese equities are actually outperforming U.S. equities if you take out the currency effect. UK stocks are outperforming US stocks. Some emerging market equities are outperforming. And so not all the capital is flooding here. It is looking for opportunities where policymakers are less constrained, where valuations are a lot less demanding, where exposure is a lot more moderate.
What you said about yields being attractive to other nations, how high do Treasury yields have to go in order to remain that attractive to support the dollar?
That's a great question, and I don't have a number for you, but what is interesting to us when we look at the bond market, so we try to understand all the different players in every market and what motivates them to buy or sell. And when we look at the U.S. bond market today, even though you have less issuance, for the Fed flipping from quantitative easing to quantitative tightening is obviously very significant. But the big player that we're watching that we think suggests more upside for bond yields are banks. So a year ago, you had a steep curve, you had a ton of deposits coming in, and the banks were putting that into bonds. So you had a lot of demand keeping down the yield. That's over. The curve is flatter, the deposit inflow is slower, so there's less bank buying of bonds to hold down the yield. So when we look at who's going to buy those bonds if the Fed's out, we still see a supply-demand imbalance that to us suggests yields higher. I don't know what the magic number is, but we still think we have further to go on the upside.
To go electrical engineering on you, this is within the perfect electrical system of Switzerland, and trust me, folks, it is perfect. The slew rates here that you're describing, how do you affect an interest rate parity strategy, a sophisticated hedge, if you will, given slew rates we've never seen before?
Are you talking about risk parity, or are we talking about, So what's so interesting to me about all of this is when you think about how most investors in the world have positioned for the last 1 or 2 decades, they have been biased towards rising growth and falling inflation. That's 60-40, right? You're going to do your equities do well if growth is rising, et cetera. Right, it worked great till now, and the world has gone upside down. So now we have falling growth and rising inflation. Obviously, we've seen the portfolio hit those folks have taken. The difference with risk parity strategies is that they're balanced for growth and inflation. So even if bond yields are going up, you have balance in other parts of the portfolio, namely commodities and other inflation-sensitive assets. So they tend to hold up better through the cycles, including these periods.
If they let me go back to New York, can you come back and visit us to continue this discussion?
Of course, always.
To me, it's the arch financial question for our listeners and viewers is the death of 60-40.
Right.
Calibration. Rebecca Patterson, just
Thank
brilliant.
you.
Thank you so much.
By the way, maybe we won't go back to New York. You know, Thomas Gottstein of Credit Suisse saying that we're all going to work remote part of the time, so we could, you know, work remote from
the hills.
There you go. I was waiting for it. Here we go.
There we go. We're going to continue on here. We've got much more coming up through the next number of days, including an important conversation with the former Secretary of State, John Kerry, a special presidential envoy for climate for President Biden. On radio and television, this is Bloomberg.
Keeping you up to date with news from around the world with the First Word, I'm Ritika Gupta. The White House is now walking back President Biden's comments on Taiwan. In Tokyo, the president said the U.S. military would intervene to defend Taiwan in any attack from China. That appeared to break the long-standing U.S. policy of so-called strategic ambiguity. The White House later said the president simply meant the U.S. would provide military equipment to Taiwan, not send troops. And the Biden administration announced that a dozen Indo-Pacific countries will join the U.S. in a sweeping economic initiative. The goal is to counter China's influence in the region. Australia, India, Japan, South Korea, and New Zealand are included, along with 7 Southeast Asian countries. But the new framework doesn't include any tariff reductions, and it's unclear which parts are binding. In Australia, the Labour Party's Anthony Albanese has been sworn in as Prime Minister. He defeated former Prime Minister Scott Morrison in an election held on Saturday. He's promising swift action on climate change, greater gender equality, and improved wage growth. Pfizer and BioNTech say their COVID vaccine was highly effective and prompted a strong immune response in children under the age of 5. That's likely to pave the way for infants and toddlers to finally get immunized. The companies say that in a preliminary finding, a 3-dose regimen was 80% effective in children ages 6 months through 4 years old. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
There's no doubt we face serious global challenges right now, inflation first and foremost among them, and it's hitting families hard. But there's also no doubt that the United States is in a better position than any other major country around the world to address inflation without giving up all the economic gains that we've had, and that's because of the strength of our recovery.
Brian Deese, National Economic Council Director there on CNN, of course, talking up the themes of the moment. We welcome all of you on radio and television, Lisa Abramowitz and myself, John Farrell, on assignment in Capri. And right now, well, we've got a lot of things to speak of in a one-hour conversation, which we will compress with John Kerry. He is U.S. Special Climate Envoy and former U.S. Secretary of State. And whatever your politics, he is someone who has honed our political debate of this nation for decades. It started at St. Paul's School. You were up at St. Paul's in Concord, New Hampshire, a few years back, and debate and discussion was beaten into you, wasn't it?
Yeah, well, no, we had a terrific tradition of back and forth, Socratic testing.
No, it was a really important tradition back then. What happened to America where we walked away from the niceties of debate?
Well, the United States Senate used to be the greatest deliberative body in the world. And obviously, a lot of people are anxious about where the deliberation is today. It's changed. It's really changed. I think what happened is in the 1990s, our politics changed. It became far angrier, far more intense, far more personal. You remember the discussions of the politics of personal destruction. And now we have a lot of angry people who are appropriately angry on either side of the aisle, right, left, and they just don't feel the government's delivering to them, and we have to change that.
How does the U.S. lead with such disunity at home?
Oh, I think President Biden is showing you how he lead right now. He's in Asia and meeting with the Quad. He's been leading on global climate change around the world. Yeah. He put America back put the United States back into the Paris Agreement, helped raise ambition in Glasgow, make Glasgow a success. You know, I think people understand that we had 4 difficult years. The country decided that was an aberration and elected President Biden.
Right.
Now, we're in the busy building back process, but I think we've made a lot of progress in the last year.
The helicopter flying over says GOP on the side of it. I think that's what's going on right now. Senator Kerry, I want to talk to you about climate. I was blown away a number of years ago with the Bank of America people. You are not another face talking climate. You're not another celeb talking climate. You've actually leaned over the desk in Boston and said, I got to learn the math. I got to learn the statistics. It's been knocked asunder by the price of coal, by this war in Ukraine. What is your strategy to sustain our focus on climate change, given the tumult is measured by the price of coal?
Well, President Biden is determined that over the course of the next months, we're going to get ready for the next meeting by trying to raise ambition around the world. We are very busy right now working with specific countries, Indonesia, Vietnam, South Africa, India, to bring capital to the table, to bring the finance and the technology to help them be able to deploy to meet the goals of the Glasgow Paris Agreement. But in addition to that, we have to work to get the trillions of dollars deployed. This is going to cost literally trillions of dollars in order to effect the transition. And the way that we can do that is by bringing various players to the table, philanthropy, to help blend the finance. Yeah. So you have people taking first risk, people who are de-risking the investment, and hopefully there are a lot of folks doing that. We have companies that are now signing up. On Wednesday, we'll be making a major announcement with Bill Gates, with Mark Benioff of Salesforce, others, of CEOs who are directing their companies to become first movers. They're creating demand in the marketplace, ordering 10% of the steel Volvo or Ford Motor Company will buy is going to be green steel. Cement, the largest cement dealer in the world, Folsom Lafarge, is producing green cement. I mean, there's just a whole range of things in aluminum, in carbon removal,
Senator,
in shipping,
in
aviation.
We only have a couple minutes left, and I do want to get your sense.
Yeah.
On gas, you've talked about natural gas being central to the transition to a greener future, but not talked about investing over the next 30 to 40 years because you're hoping to transition away from that. How do you dovetail the now into the future?
I think it's critical that lending institutions that have a vast amount of capital involved in the fossil fuel industry begin to demand more from that industry. It is appropriate, I think, to have a gas transition for some period of time while you bring technology to scale that is going to change altogether what we're doing. There's an enormous amount of research right now, and frankly, there's about $1 trillion of venture capital already moving towards these new technologies: green hydrogen, longer battery storage, direct air carbon capture, green hydrogen. I mean, there are things that are going to just change the way businesses do business, and that's going to be part of this revolution. I think we're looking at, and I don't think this is exaggeration, we're looking at the largest economic opportunity and transformation since the Industrial Revolution, and this will be bigger because every nation in the world is going to have to move to a clean, new energy economy and future.
I want to center back here in the final question to the future of the Democratic Party. What we have seen is a centrist Joe Biden and you as a centrist John Kerry overrun by a rigid, progressive, or liberal wing of the Democratic Party. What is your counsel as they maybe lose the House, maybe lose the Senate, who knows, or the White House, but what is the counsel you have to liberals who will not bend as you have spent a career bending?
Well, I like to think I haven't always been. I find the compromise where you can and you need to, but you have to be reasonable, obviously. You have to recognize, I mean, the old saying in Washington, don't let the good, don't let the perfect become the enemy of the good. You have to find a compromise. That's the nature of legislating. If you decide you want to be a legislator, do that. And we need to move in that direction. But I'm not in the politics of the back and forth now. I'm trying to bring people together, Republican, Democrat, liberal, conservative, to understand that this crisis is existential, doesn't have a political label. It's universal. It's not a bilateral issue between China and the United States. It is existential for everybody on the planet, and we need to be smarter about coming to solutions. The best way you get there is through, winning an election, but then also compromising to find a path forward.
John Kerry, thank you so much for joining us
you.
at Davos. He is U.S. Special Presidential Envoy for Climate. We've got much more coming up, including a conversation with Joe Stiglitz. Stay with us.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
From the meetings of the World Economic Forum in Davos, Switzerland, we welcome all of you, not in January, in May. Just a wonderful, glorious first day here. Lisa, would you hike 20 miles today?
Yeah, not today, but yesterday I had a good time. It's beautiful here.
It was warm up yesterday.
Yeah.
John Farrell on assignment, as they say. You know, he's in Capri again, but we wish him well. Right now, a quick data check of markets doing better than expected. The 10-year yield up 5 basis points at 283. I would note Brent crude with a 113, 114 trading range, but a more constructive market. And for John, we do the Dow Jones Industrial Average Futures up over 300 points as well. Doing better than me in Davos is Romain Bostic in New York. Romain?
Hey, good morning, Tom and Lisa. Yeah, keep an eye here on the market. You talk about constructive right now that we're seeing here in the pre-market here. We actually do have a decent rally. Volume is relatively light here in the pre-market, but it is a broad-based rally with a lot of the bank stocks and energy stocks providing a foundation here for some potential upside. Keep in mind, JP Morgan is actually having its investor day today. It's already released a presentation on its website that shows the company increasing its outlook here for net interest income. The shares up about 1.5% on the day. Oxy and a lot of the other oil and gas companies moving higher as well. Oxy up about 1.4%, and even some of the tech companies are getting in on the action today. Not by much, but you have Apple, Microsoft, Amazon, Alphabet, Tesla, all moving higher here. You add that up, it's a big part of the reason why you're seeing green on the futures market in aggregate. Elsewhere, you want to keep an eye on what's going on in the software space. An interesting deal here, according to people familiar with the matter that Bloomberg News has spoken to. Broadcom is said to be making a bid for VMware. Now, this is going to be a big deal. A chip maker buying a software company. Now, remember, Broadcom has tried to sort of dabble in this space before with that purchase of Symantec's enterprise software business. This will be a $40 billion deal if this does come to fruition. Broadcom shares down about 5% here on the day, and VMware up about 22% here in the pre-market. And Siga Technology is also a company moving. Keep an eye on a lot of these companies that make antiviral drugs. A lot of talk right now about monkeypox, Tom. Those shares up about 26% in the pre-market. Yeah, be careful out there.
Romain Bostic, thank you so much. To close this afternoon as well, a more constructive market. This is an important conversation. Each and every year at Davos, there is someone who owns the valley. Usually it's some rock star that shows up by helicopter, or maybe it's some famous model that I don't know their name, you know, someone like that. This year's rock star is Joseph Stiglitz. He is a Nobel winner for the mysteries of information. He is someone at Columbia who has taught and written about our discontents and with the challenges of globalization, given war in Ukraine, a food crisis, and others. Truly, Joe Stiglitz is the attendee this year at Davos. If you wrote globalization and its discontents today, what would be different?
Oh, I think when I wrote Globalization and its Discontent, I was mostly focused on the discontent in the South, in the developing countries and emerging markets. Since then, that discontent has become global. We've had globalization of global discontent. And I think part of the reason is that we've seen that globalization has left us in the United States unprepared for COVID-19. We weren't able to produce even simple things like face masks, protective gear, complicated things. And now this broader discontent of globalization that I talked about with emerging markets and developing countries is showing up in a peculiar way in the lack of support for the West, for the United States and Europe and other democracies in our position against Russia's invasion of Ukraine.
Well, before we get to that, though, is the inflation that we're seeing right now a symptom of these fissures, of these crises, whether it's Russia and the war in Ukraine or the lockdowns in China? Or is it just an exasperation of a deglobalization or reglobalization in a new form that people haven't fully understood yet?
Well, the disturbances are to a large extent a reflection of the same kind of short-sightedness, failure of markets to attend to risk adequately that we saw in the 2008 crisis. I wrote in my book, Making Globalization Work, the sequel to Globalization and its Discontent, that it was extraordinarily risky for Germany to become so dependent on Russian gas. It was so clear back then that Russia was not a reliable trade partner. Why would you put all your money in all your eggs in that basket? And yet, Germany did, Europe did, and part of what we're seeing now, because we didn't respond to climate change. You had Senator Kerry here a few minutes ago talking about this. We should have moved to renewable energy, realizing that it was more reliable than political dictators.
So fast forward to today, and the policies that we're implementing, whether it's to try to curb Russia and to hamper them in their advance in Ukraine, or whether it comes to tariffs in China, what are we getting wrong?
Oh, I think we're not getting enough solidarity. We're asking a few countries, they may have made mistakes in the past, but now we have to have solidarity. We're fighting a war right now. It's a global war. It's a war to preserve the international rule of law. And yet we're asking some of the poorest countries to bear a lot of the price in terms of higher food prices. They may starve. Okay. We're not doing anything about the debt crisis. So in terms of managing a global alliance, we're failing.
Joe, you came out of Gary, Indiana. It's flat on its back like no other city in the country. The Redekers, two academics writing in Foreign Affairs, talk about the initiatives forward where, hey, the fancy people maybe ought to pay attention to the middle class. How in this new America do we get the elites to join with the middle class like they did when you and I grew up?
Well, I think that we all need to be aware our democracy is at risk. And our system, economic system, is at risk. So if we don't get that kind of solidarity, who knows where things will go? So you talked a little bit before about inflation. It's really hurting the people at the bottom and the middle enormously. There are oil companies making billions of dollars.
You and I fought this battle in 1976. He had a VW Rabbit. You would have loved it. Joe, the bottom line is the elites have forgotten the middle class across the entire political persuasion. How do we re-engage and build a trust with the middle class in America, given the present shocks here in Happy Valley?
I think that we have to remind them, as I did an article I wrote 11 years ago, of the 1%, for the 1%, and by the 1%. Part of the message of that article in the Vanity Fair was to say that it is in your own self-interest to show more solidarity, because if you don't, this whole system is going to fray apart.
And I'll say this, Lisa, this is important, really important, given the years, and when you and Rogoff were on stage here, that honor, when the two, they haven't gotten along for years. It's like the Kardashians, it's worse than that. Here's the heart of the matter. We had compensation structures in America where the middle class was attached to the elites. And then we changed it to where the elites are making more money than God, and the middle class is left behind. And to me, that was a tipping point.
This has been a tipping point, and here we are with the new tipping point with inflation, and just want to end here. Do you think that it's more important to get inflation under control at this moment than to worry about or avoid some sort of downturn, which seems to be the Fed's conundrum?
Raising interest rates is not going to solve the problem of inflation. It's not going to create more food. It's going to make it more difficult because you aren't going to be able to make the investment.
Then how do you clear the market if you don't raise interest rates?
What you do is you have supply-side interventions. One of the things that President Biden tried to do is to have more care for children, and that would mean more women into the labor force. That releases one of the constraints, labor supply. You look at, we used to have surpluses in food in the United States.
But all this takes time.
We can get those back.
How do we do this in a time-sensitive way?
I think we can do a lot more than we're doing. Killing the economy through raising interest rates is not going to be a solution in any time frame. So at least trying to do everything we can globally to increase the supply is going to do more on dealing with the problem and causing a depression.
One last question. Your heated rhetoric melted all the snow in the valley. Let's go all Scoop Jackson on you right now, the giant from Washington State. Can you, as a raging Democrat, support a fiscal rebuilding of our defense and of our Navy to push against China and the shock of Putin and Russia?
I think we can support defense. Putin has shown we need defense. Much of what we spend is weapons that don't work against enemies that don't exist. So if we take our current spending on defense and re-examine it, I mean, we're so much back in the 20th century, the latter half of the 20th century. Yep. We're in a world of cyber warfare, of all kinds of new forms of warfare. We need to adapt our military expenditure. I think if we did that, we don't have to spend more and more and more. We have to spend smarter and smarter and smarter.
We're out of time. Joe Stiglitz, thank you for an annual visit. You're the professor from Columbia University. And I will say most seriously, folks, a reading of Globalization and Its Discontent is a good place to start on a study of international economics. He's got like 14 other books out after that, but that's the one where you can get started with Stiglitz 101. Coming up from Carlisle, the television star, David Rubenstein. Stay with us from the World Economic Forum in Davos. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden says he'll review Trump-era tariffs imposed on imports from China. That led to a rally in the offshore yuan. The Biden administration has maintained most of the tariffs imposed by his predecessor, but the president has come under pressure from some lawmakers and economists and the U.S. Chamber of Commerce to reduce or eliminate them. And President Biden is seeking to reassure Americans about the current monkeypox outbreak. At a news conference in Tokyo, the president said it was unlikely to cause a pandemic on the scale of the coronavirus. He said the U.S. has enough smallpox vaccine stockpiled to deal with the outbreak. Ukraine's President Volodymyr Zelensky said Russia's economy should be shut off from the world, and he invited global investors to shift their resources into Ukraine to help rebuild the country. In a video address to the World Economic Forum in Davos, Zelensky said this is the moment when it is decided whether brute force will rule the world. And in New York, police are searching for a man who shot and killed a Goldman Sachs employee on a subway train. Daniel Enriquez was 48 and had worked for Goldman since 2013. Goldman calls the death a senseless tragedy. An increase in assaults on New York's subway system has prompted Mayor Eric Adams to boost the number of officers on patrol. HSBC reportedly has suspended an executive after he criticized the finance industry for worrying too much about climate change. According to the Financial Times, the bank is conducting an internal investigation into Stuart Kirk's remarks. Kirk is the head of responsible investing for HSBC's asset management unit. Global news 24 hours a day on air and on Bloomberg. Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's very clear that people are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year.
He's the chief executive officer of a bank in Switzerland, Credit Suisse, and Thomas Gottstein is not in a risk-off mode, looking at his bank and looking at a financial system beleaguered right now. Tom Keene with Lisa Bramwitz. John Farrow is in Capri, which is a good and beautiful thing. What have we learned so far? I think it's been a really strong start to 4 days.
I think that the churn of uncertainty, I mean, trying to solve problems that you were trying to identify and really define, at a moment when we just saw the longest streak of losses in the market going back to 2001, how do we pivot forward at a time of rising inflation, failing investing models of the 60-40?
Let's dive into a conversation with someone who's had world leadership in quality conversations. David Rubenstein joins us. Of course, you know him with his work on Bloomberg. He's co-chairman and co-founder of Carlyle Group. He's on the board of the World Economic Forum and I think owns like 3 cantons in Switzerland as well. Wonderful to have you here today.
My pleasure to be here. Thanks for having me.
Is it better in the summer or the winter?
It's a lot easier to get around in the summertime, and you don't have to worry about falling down. At least I don't have to worry about it so much. I know you had a little slip, but you're okay, right?
Yeah, I'm okay. I'm doing fine. Let us talk about what underlies and underpins every transaction at Carlyle, every transaction of President Biden, and that is a financial system where it is price down, yield up. If I take the Lehman Index, the Bloomberg Total Return Aggregate Index, essentially, David, we've never seen this. How does the financial system adapt to such losses in bonds?
Well, the financial system will adapt. It always does. Markets correct, and the markets will correct. Now, I think we've had a time of enormous ebullience in the markets, low interest rates, very high growth rates, and now it's changing. It can't go on forever as it was. So now it's slowing down a bit. I don't think it's a calamitous situation, but clearly the growth market right now is not great. And I would say interest rates are going to come up for a while and probably put us into what somebody in the Carter administration used to call a banana. He didn't want to use the word recession, so Carter said, don't use the word recession, use some other word. And Fred Kahn, the inflation advisor, said, all right, I think we might be in a banana. So I don't want to say we're in a recession. I don't know if we're in a banana, but it's something close between a recession and a banana.
Okay, so then Biden this morning, when he was asked about it, should have said banana, because you think that that's the more realistic outcome.
There are many different definitions of recession, so I don't want to be quoted saying we're in a recession. Nobody really knows yet for sure, but clearly the economy is not as robust as it was the last couple of years, in part because of COVID, the effects of that, in part because of the war in Ukraine, and in part because interest rates are going up again. And so if all those things come together, it's not a great economic environment. On the other hand, if you're an investor, prices have come down to the point where there's some really good bargains now, and I think a lot of people that buy at the bottom are looking pretty happy now.
Do you think that right now this is a bottoming out that you see? In other words, from the conversation that you're having, is there more optimism about investing now than pessimism about the recession or banana?
Well, it depends. If you own a lot of these assets and they've gone down, you're not so optimistic. But if you don't own those assets and you now have some fresh capital to invest, it's a lot better now than it was a while ago because prices are a lot lower. If you own assets, the ones you own may not be worth as much, but you don't have to sell those assets at these prices. But right now, people are going to make a lot of money buying at these prices, I believe, because prices are pretty low now relative to where they've been.
But David, to Andrew Mellon, in another time and place, are we going to see the elites do a national roll-up of our assets while with inflation, the middle class is flat on their back? And to get specific, Blackstone taking the heat, but private equity, private money is going after residential housing as a sound investment. And there's a raging debate about that. Is this a shell game of the elites where the middle class beleaguered doesn't get to participate?
Well, first of all, Blackstone and Carlyle and other firms, they basically represent pension funds to a large extent, which are teachers, firemen, policemen, so forth. So it's not exactly the elites who are buying it for themselves. They're buying it for pension funds to a large extent. Secondly, the economy is much different than Andrew Mellon's period of time. Then a few people did control the economy. So now it's a much bigger economy, and it's a global economy. It wasn't when Andrew Mellon was Secretary of Treasury.
Meanwhile, we are looking at the turmoil, and I do wonder whether you think that Davos still has the same relevancy that it once did.
Davos, I think, is relevant because people are still coming. If people didn't come, it wouldn't be relevant. People are coming because when you can go in one place and you see the CEOs and the heads of state of so many different places, it's a good thing. It's very convenient. So if I wanted to see some of the people here, I would have to spend 6 months going around and meeting all these people. Now I can meet them in a couple days here. So it's very relevant. Now, are we going to solve all the global problems in the world in the next 4 days? Probably not. But I don't see anybody that comes here and says, you know, I wish I was somewhere else. People come here because they think it's actually a good chance to meet other people. And because we've been in COVID environment for so long, some of these people haven't been seen by others for 3 or 4 years in person. I haven't seen some of these people for 3 years.
Robert Hormats a couple days ago was heated with us about the rebuild of our relationship with the Pacific Rim. What can private capital do to assist our government in projecting a new America vision there? You know, I think of the Ayala family in the Philippines and other large pools of capital. Don't we assist our nation by projecting and advancing capital to the Pacific Rim?
We do, and we are. I mean, a lot of the private equity firms and other large corporations are investing enormous amounts of money in Asia. Asia has grown dramatically in the last 40 or 50 years since Nixon went to China. It's an incredibly different world. We aren't pulling back dramatically. I think the investment in China is pulling back a bit because of some of the regulatory concerns there and the economic concerns in COVID. But money is flowing into other countries. India is a good example. Japan is a good example. Korea is a good example. A lot of Western money is going in there now. So I don't think we're pulling out from the Pacific Rim. And I think Biden is, when he's there now, as he is, he's talking about American capital coming in. I think American capital is coming in.
David Rubenstein, thank you so much for joining with Kyle. Thank you for your conversation on Bloomberg.
My pleasure. Thank you for having me.
My favorite of all time is Jeff Bezos. But
he was the best.
I don't know if he was the best, but it was just great how you hammered him. I mean, it was great.
Thank you very much.
David Rubenstein, thank you again. I think what's so important here is, and this Davos is so different from 2009, people aren't shocked by the system. They're shocked by the war is the fundamental difference right now. We didn't have that in 2009.
And this feeling of constant shocks. I mean, we came from a pandemic, that crisis. Now we're dealing with the crisis of Ukraine.
Crisis.
And now we're dealing with the shutdowns in China, prolonging supply chain disruptions. How do you deal with crisis upon crisis overlaid with an inflation we haven't seen since the 1970s? And that angst is underpinning all discussions.
It's my theme of the Davos this year, and I'm stealing it from George Will in 2001, from Robert Gates, our defense secretary, and played up recently. The holiday from history is over. And so there's
I thought you were just going to sing for us.
Original things. I'm not going to
In the hills. He goes into the Alps and just,
Let's do a data check here with, a nice up to the market. It is a different feeling than the crisis we've seen over the last number of days, and all in all, a better bond market as well, showing a little bit of confidence within the system. 282 on the 10-year yield. Brent crude 113 as well. Coming up on the markets, we'll start the hour on the markets back in New York. Matt Brill will join us, head of U.S. investment grade at Invesco. From Davos, stay with us. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
inflation in some places is continuing to accelerate here. I don't think we've felt the full implications.
Companies are having difficulty managing the inflation environment.
I still think this is a year or two where the U.S. is going to continue to outperform the rest of the world.
The Fed is tightening interest rates, and that means equities are likely to go down as they have been.
Everybody is now worried about a global slowdown. I am too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A moment of calm in markets. The world's elite joining us at the World Economic Forum, where we are broadcasting live in Davos, Switzerland. Good morning to all of you back in New York, to London, to those in Switzerland. This is Bloomberg Surveillance live on Bloomberg Television and Radio, alongside Tom Keene, John Farrow off. What did you say, on assignment in Capri?
Capri.
He's going to be checking. Exactly, Capri style. And we'll perhaps be heading there next. But I digress from a moment where we reassess the landscape that we're in after crisis after crisis.
For those of you on radio, we're reassessing the green behind us. It is gorgeous here in Switzerland. We all know that. That's not news. But really, Lisa, a first here for the World Economic Forum. 51 years of what Klaus Schwab invented here with the pandemic and all. They're trying to get it going again from January of 2020. But what stuns me is how this is such a different Davos, even from 2008 and from the shock of 2009.
Well, it's not cold, for one, right? So there is that issue. But besides that, there is a recapitulation of what it means to solve problems at a time when you have food prices that are spiraling, you have conflict in Ukraine, and you're dealing with this frustration with markets. And I keep going back to the 7 straight weeks of losses on the S&P and the NASDAQ, the longest stretch since 2001 for the Dow, for those of you who do track it. It's the longest streak of losses, 8 weeks straight of declines going back to 1923.
I remember that well.
So there is a feeling of calm today.
As we mentioned with David Rubenstein, and I'm not going to let up on this, the bond market gets equal treatment. The carnage in the bond market is tangible. You can rationalize it all you want. The fact is, it's tangible.
In the markets, when you talk to strategists, they have a belief, a lot of them, that the Fed will come in and will save the market by not raising rates too much.
I didn't hear that from Jason Furman.
I didn't hear that from Jason Furman. I didn't hear that from a lot of different individuals who we're speaking with here at the World Economic Forum. That, I think, is the tension underpinning the people who are bulls and the people who are bears at this moment.
The feeling just in the first day here is it's really interesting. It's a much more international audience on a percentage basis, I would suggest. Fewer Americans, maybe fewer from the United Kingdom, but even with that, there is a heated conversation that we'll dive into on economics, on international relations, but we are not going to forget the market turmoil we're in. We'll get to Matt Brill here in a moment. Let me show the data to you once more. It's a quiescent screen here with equities up today. I don't know what Dow futures are. John Farrow says it doesn't matter, but the yield is up a little bit. Dollar comes in weaker. I've got Brent crude near a 113 level. West Texas Intermediate 111. This is, to me, the most interesting guest of the day. We've got lots of good guests and great guests like Joe Stiglitz on globalization, but interesting is the bond market. And this is Lisa's wheelhouse. I'll begin and she'll take over. Matthew Brill joins us. He's out of North America Investment Grade Credit at Invesco. Matthew, I look at the Bloomberg Total Return Investment Grade Index, and I want to know, how do I begin to make money back? How do I recover from those double-digit losses?
Hey, good morning, Tom. Wish I was with you out there. It looks great. Yeah, it's been a really, really tough market for U.S. investment grade credit all year. You're down roughly 13%. It's the worst start to a year. It will be the worst year ever if it ended today. But the good things are we seem to be seeing some stabilization now. We're starting to actually see negative correlation between Treasury yields and credit spreads for the first time all year. So that's a good thing. We're starting to see investors come in, and you're looking at 12-year highs on investment grade yields. So the valuations are there. You're starting to see the negative correlations, which is good. But you're still seeing people just very apprehensive to invest, and I think you're at a decent point where you're going to claw back some of the losses, but you're obviously not going to get them all back this year. But you at least should start the ability to not lose money from this point, which I think is the first step in actually making money.
Matt, how much conviction do you have, and do the people that you speak with have, at a time when a lot of it is contingent on the Fed backing away from the plan that everybody else says they will continue with?
So I think the Fed is going to continue to plow through this. I think the Fed is not going to provide you a put. I think if you're relying on that, you're mistaking this market. You're mistaking the Fed. But you do have to realize that the cost of debt has gone up significantly already. So the Fed has done its job by talking up rates, even across the curve. I know they're not as much up out the curve as they are on the front end, but it's gotten expensive to borrow, and that's going to slow the economy. So I think you're already starting to see the impact of that. I don't think the Fed has to back away for this to already be effective. So I think right now you're seeing the impact of the Fed. Margins are getting hit. You're starting to see a bit of a slowdown here and there. Companies are missing earnings. I mean, that's not great, but it is the first signs of things slowing down, which should lead to inflation slowing down the third or fourth quarter of this year, which then enables the Fed to actually back away. So the Fed's not going to back away because the market's tough. The Fed's going to back away because inflation starts to slow later in the year.
It's gotten more expensive to borrow, Matt. But in reality, a lot of companies don't have to borrow because they've got so much cash on hand. When does it actually matter that it costs so much to actually borrow money?
So right now, you don't have maturities that you need to roll, which is great. So you only have 2% of the investment grade market that matures in 2022, 5% matures in 2023, and 5% matures in 2024. And it's very similar in the high yield market. So we saw Carnival come last week in the high yield market at 10.5%. But generally, companies aren't going to be forced to come to the market to pay up. But what you're going to see is them opportunistically do it. And so earlier in the year, it seemed like free money for corporations to borrow. So they were borrowing as much as possible. Right. That was a very negative technical. Right now, it's getting expensive. So they're just not going to borrow as much, which should improve technicals going forward, which I think will help improve total returns as well.
Matt, what will happen, and I speak of Invesco here in managing old line serious money like pension funds and insurance company money. What happens to the actuarial assumption? If rates move up, does the actuarial assumption actually move higher?
So the actuarial assumptions are based on a lot of formulas that are too complicated for me to understand or to get into on this show, certainly. But what we're seeing is that they can basically immunize their long-term liabilities when rates go higher. So if you want to own stocks and bonds, when bond yields go up, you actually are going to buy more bonds. And this is great for them right now. And we're seeing a huge shift.
Okay, but I don't mean to cut you off, but this is the heart of the matter because you use the pro word immunize. If you immunize within a new higher rate environment, how do you account for the price decline that you've enjoyed in bills, notes, and bonds?
So the great thing of being a pension plan and insurance company is you get to close your eyes and you don't have to deal with mark-to-market accounting. They just get the book yield that they bought it at, the book price that they bought it at. And as long as they don't think there's a fundamental problem, which is a key point there, as long as there's not a fundamental credit issue, they continue to mark those bonds at where they bought them. So on paper, they have not lost any money thus far. And in fact, if they buy bonds at higher yields going forward, they're better off. So the retail investor takes the mark-to-market loss. The insurance company, the pension plan, does not. So they have much clearer ability to ride this out, which makes it more attractive to them.
Lisa, this is so important. If Frank Fabozzi was watching right now, young Brill would have just gotten an A++++.
Well, that was what he was aiming for.
That's the smartest discussion of this I've heard from anybody. That was brilliant.
Well, but I will say, Matt, I have a much more basic and less academic question. Have we reached peak bearishness? Is there a feeling of capitulation that has been baked in at this point?
I think we have. I think we've hit the highs for corporate credit yields from this point. I think somebody summed it up very good with me last week on the call. They said, my stomach hurts to go buy a bond right now. That means it's got to be the worst time, or got to be the opportune time to start buying.
Matt Brill, go away and talk to retail right now, who you said is enjoying taking the losses. Matt Brill with Invesco. Do you know what I noticed? On radio, you're missing all the drama here. We've got wins like Hurricane Pekka from years ago.
Straight up in the air.
Did you see what I did to my hairpiece? It's just, I did hair care for men and the whole thing, and it went down in flames.
I think it looks really avant-garde.
On a break, she pulled my hair and said the glue's coming off.
I'm not that mean. Honestly, my hair's flying as well. Honestly, it's a moment that is definitely memorable here in Davos, and we have a lot of incredible guests coming up to really give us a sense of the political moment. This, to me, I think we've been a bit remiss given the conversation coming out of China with President Biden.
Yeah, I think the politics was heard from John Kerry. I mean, you can talk to. We didn't even bring bring up Iran and Iraq and all the political turmoil that he faced as Secretary of State with President Obama. But at the heart of this is the political debate that's going on right now after the primaries.
Yeah, and then
it's
something that we
fractious.
haven't talked about as well is what if the Democrats do lose the primaries, what that does to possible policy
Well,
prescription.
lose the election.
Exactly. Right now we are looking at markets that are losing some of the momentum from earlier as we head toward the opening bell, but it does seem to be a sigh of moment. Yes,
It's only
opening
10
bell.
after 8.
Yeah, that's right. That's where we are. But right now here it is what, 2:30?
I'm going to look at the foreign exchange market, which I do think is important, and it does play into the politics of the moment. Some EM fragilities here and there, but I really want to point out, as Winston mentioned earlier, in the Plaza Accord worry that's out there, the gloom, the doom of a too strong dollar. We're miles away from the currency targets that people are looking at. We're miles away from 135, 140 yen, miles away from a 90 or an 80 week euro as well. That'll be one thing we'll continue to monitor here in Davos. Coming up, talk about fractious politics. Pat Toomey of Pennsylvania on the Senate Banking Committee. Stay with us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine's President Volodymyr Zelensky said Russia's economy should be shut off from the world, and he invited global investors to shift their resources into Ukraine to help rebuild the country. In a video addressed to the World Economic Forum in Davos, Zelensky said this is the moment when it is decided whether brute force will rule the world. The White House is now walking back President Biden's comments on Taiwan. In Tokyo, the president said the U.S. military would intervene to defend Taiwan in any attack from China that appeared to break the long-standing U.S. policy of so-called strategic ambiguity. The White House later said the president simply meant the U.S. would provide military equipment to Taiwan, not sending troops. And the Biden administration announced that a dozen Indo-Pacific countries will join the U.S. in a sweeping economic initiative. The goal is to counter China's influence in the region. Australia, India, Japan, South Korea, and New Zealand are included, along with 7 Southeast Asian countries. But the new framework doesn't include any tariff reductions, and it's unclear which parts are binding. Bloomberg's learned that chipmaker Broadcom is in talks to acquire cloud computing company VMware in what could be a massive deal. VMware currently has a market valuation of about $40 billion. An acquisition would put Broadcom into a highly specialized area of software. Pfizer and BioNTech say their COVID vaccine was highly effective and prompted a strong immune response in children under the age of 5. That's likely to pave the way for infants and toddlers to finally get immunized. The companies say that in a preliminary finding, a 3-dose regimen was 80% effective in children ages 6 months through 4 years old. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Over the next year, I'm not that worried. I mean, I'm always at 15% for a recession. Maybe I'm at 20% now for the next year, but not much higher. When you look after this year, that's when I get more worried. That's when more of the Fed rate hikes start to kick in and affecting the economy.
Jason Furman, professor at Harvard Kennedy School. We welcome all of you to our windy performance here at the World Economic Forum in Davos, and the wind is going this way right now, Lisa.
Oh, you want me to lean over?
Come back with me right now. Come on, Lisa. Come on over. Here's the wind coming off the mountains.
My wind's going straight up, you know. I don't know.
It is. It's been. We're making it up as we go, as are all at the World Economic Forum. Quite seriously, Klaus Schwab has been really wonderful and very sober about how this is different. It is a mixture of international relations and, of course, these markets challenged, and, of course, a war in Ukraine. And off of that, the food crisis. We barely touched on the food crisis today.
Yeah, and how it's an idiosyncratic food crisis, particularly for nations that are reliant on Ukraine, particularly for nations that are running out of some of the supplies. How do you deal with that at a time when a lot of the developed world is dealing with their own crises, and that really is a reluctance to spend, and that's sort of the dynamic underpinning
the underlying hydrocarbon input into
Yeah.
agriculture as well. What we're going to do now is drive forward the conversation with a bent to Latin America, but we do so with the financial acuity of General Atlantic. They're a storied name in finance. Martin Escobar joins us now, their co-president. Thank you for joining us here in Windy City.
Tom, Lisa, thank you for having me.
Pretend we're on a deck in Chicago and it'll work out. I want you to talk to me how you use foreign exchange in Latin America is a litmus paper of how government systems are doing there. You are doing finance. You're doing long-term investment into Latin America, and yet it's within fragile economies with fragile foreign exchange. How do you use foreign exchange to study Latin America?
That's a great question, Tom. Listen, we've been in Latin America. So first,
to level set, GA is 42 years old, $80 billion in assets. We've been investing in technology for 40 years. We've been in the emerging markets for 20, including Latin America. And Latin America has been tough for most private equity investors because they got FX wrong. And what we've tried to do is bet on digital companies that are growing 30, 50, 60, 70%. So even if we get the FX wrong, we still meet the required returns. And it's really easy to get the FX wrong.
So we've seen a huge reset in all tech companies around the world over the past 6 months. Has there been the same reset, just not priced in yet, in the private world?
I heard you, Tom, use the word carnage. There's been carnage in public growth stocks.
Right.
Dropped 70 to 80%. It's been broad across good companies, great companies, and more or less companies. The private markets have not transacted as much.
Right.
And what we've looked at in previous corrections is it takes 6 to 9 months before the public market comes to translate into private transactions, because good companies need not transact in the middle of the storm. And we are in the middle of a storm, not just in Davos.
So does that mean that you're extending less money, less financing at this moment in preparation for what's to come in the follow-on in the private world?
So interestingly, in the short term, we're seeing terrific opportunities in the public markets. We're not typically a public market investor. Exceptionally, we're becoming one right now. In the private markets, we are slowing down. Now, what's beginning to happen is consolidation. I mean, last year, 60,000 companies got funded. Half of them won't make it through the correction. The strong will get stronger, and the weaker will be consolidated into the strong. And so we're beginning to add capital to some of these companies to consolidate their industries.
Just to follow on, this is important. You're pulling back from the private sphere and going to public companies because of the opportunity that you see. Do you think that we are not prepared for the selling, for the lack of investment on the private side that will trickle out in the next few months?
Listen, in the short term, the best opportunities on the public markets, because there's a stampede of people coming out of the public markets, and the macro forces overwhelm the micro ones. There's such a mispricing of growth. And even overall, if you look at the PE to growth of the entire market, it's at 0.7. The last time it was this low was at the great financial crisis, and it was 0.8. So we're just finding better deals. Now, there's so much liquidity in the private markets, it will take a while before this phenomena begins to affect companies, but it will. Our guess is 6 to 9 months.
Are you seeing within sort of a decades-long autocracy, and I mean that in a very loose phrase, of South America, a greater respect and understanding for capitalization, for contract, for rule of law? Is it easier to do business now than 5 years ago, 10 years ago?
It's a step change in a number of ways.
What do you mean by that?
First, there's something we call the globalization of entrepreneurship. Great minds are born everywhere, but they don't have access to ideas and funding in the old world. In the new world, they have access to ideas and funding. Just to give you a sense of magnitude, last year in Latin America, the growth and venture capital invested $19 billion. That's more than the previous 20 years combined. So if you're a Latin American entrepreneur,
what was the catalyst to do that? Why such a ginormous number?
Because we're catching up, and there were enough proof points. I mean, we invested in a company that saw 100x appreciation. It's publicly traded, $20 billion company, profitable, trading at PE multiple, and there were.
On GameStop?
It's a company called XP Inc. It's traded in Nasdaq, and it's on a real profit, not speculative. But there's been a handful of success stories, and nothing attracts capital like proven success, and that's what happens. So there's been a step change in access of funding to the best entrepreneurs, and economies have formalized. The electronification of payments meant you can't evade taxes anymore. And all of a sudden, 80% of companies who were formerly half informal couldn't do it, and that opened that up for private investment.
Does General Atlantic think that Latin America will emerge stronger or weaker from the current inflationary impulse that's allowing their exports to be that much more valuable?
So listen, Latin America is about 10 to 15% of what we do globally. In the next 3 years, Brazil will benefit from the commodity cycle. It's a net exporter of commodities. The effects should benefit from that. That is a great tailwind. Mexico will benefit from nearshoring. So these two global macro tendencies will benefit the two largest economies that represent 60% of the GDP. So I think in this storm, surprisingly, Latin America is not such a risky place.
I got 14 more questions. Can you please visit us in New York?
Anytime.
If we survive the windstorms coming back. Martin Escobari, thank you so much from General Atlantic. To me, what's so important here, and I've been guilty of this through everything I've done at Bloomberg, is Latin America's sort of over there. It's just one big misstep by me and too many others.
First of all, there have been a series of crises, whether it's in Argentina or Venezuela or even in Brazil with what happened with the real. So there have been so many issues that a lot of people have written the region off. Could there be unexpected strength as a result of some of the import prices going up? What do you?
John, I got a message from John and Capri. John and Capri, thanks for watching. Appreciate it. Ask Martin about Neymar and what he's going to do in Brazil soccer.
Really?
Yeah, that's what he.
Yeah.
He
Do we have time?
We don't have time. I think we're luckily for Martin, we're out of time on that well. We have an extremely important conversation coming up for all of you across America and frankly worldwide. He is more than Senator Pat Toomey. He is a student of his truly fractured Pennsylvania. Stunning primaries in Pennsylvania is truly now a bellwether for America. Stay with us. No, it's not January, it's May. It is Bloomberg Surveillance from Davos.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Bloomberg Surveillance, we welcome all of you to the meetings of the World Economic Forum. 51 years they've been doing this, but never in May. Off of January of 2020, couple tough years. Let's get it restarted again. And I'm unsure, at least I'm really unsure, like, do they do it then quickly in January, or do they maybe test it and find out what people want in the summer?
I think that the plan is to go to January. My guess is if they take a quick poll after this, a lot of people might suggest that the summer months, very kindly suggest that the summer months may be preferable. Just saying.
To me, the big theme here is deglobalization. It always changes through 3 or 4 days, but right now it's that shock of the war and the total corporate system.
Yeah, although Joe Stiglitz of Columbia University came on, and he basically said he's surprised more people aren't asking him about that. He's seeing the complete focus on Ukraine, on China, what's going on there, and whether additional series of lockdowns are really going to change the narrative.
Right now, we've got a really interesting guest. This is a gentleman who was weaned on Narragansett lager beer, ended up in Pennsylvania, where he did the worst job in the world, which is own a restaurant. And he survived. Even better, got into politics and as a Republican held parchment from Pennsylvania. We welcome someone in the news, Senator Pat Toomey. Senator, welcome. So
thanks very much, Tom.
Were you really weaned on Narragansett lager beer?
It didn't exactly work that way, but I get the reference.
You get the reference with the Red Sox, of course. Senator, it is an immense time of tumult, and people with a little bit of change from under the bed are going into Rookie's Restaurant, the old Rookie's Restaurant in Allentown, and all of a sudden inflation's killing them. Yeah. That's the people of America who are getting killed. What's the Toomey solution for Republicans who take the House, maybe take the Senate, maybe take the White House?
Yeah, so I think two things, right? When we had the shutdown in 2020 from the pandemic, I think it's fair to say we lost about $2 trillion of economic activity. So we dug a $2 trillion hole. We filled it with $6 trillion of spending. We goosed demand way beyond where it would have been at a time when supply was constrained. Meanwhile, the Fed, I think, was throwing gasoline on this fire ever since the pandemic lockdowns, continued with emergency policy long after the emergency passed. So look, I think the Fed has gotten the joke and has made a big pivot. I think they're committed to see this through. And what we've got to do is stop the wild spending that's been going on.
I am most certain that in the Senate of this United States, you are the most supple, dynamic mind on economic dynamics, financial dynamics, currency swaps, and derivatives. How do you explain to Republicans who have a static vision back to the 1950s that they need to be more subtle, more dynamic to build and grow this country?
I think you need to give my Republican colleagues a little more credit than that. Most of them actually weren't yet adults in the 1950s.
But they're pressured by a president who desperately, President Trump, who desperately wants to go back to another time and place.
I think he wants to invent a new time altogether, President Trump. I mean, and he's not the president now, and I think the party should not take economic advice from him, as long as we acknowledge there were some tremendous successes. I think the tax reform was extremely pro-growth, very constructive, gave us really the best economy of my lifetime before the pandemic hit. But I think the president's been dead wrong on trade from the beginning. So it's a mixed bag there. As I say, I don't look to him. I don't think most of my colleagues do. I think we have a better grounding. Yeah.
You said you think he's dead wrong on trade. Do you agree then with President Biden that they should possibly remove some of the tariffs on China
the problem is President Biden has been a complete extension of the Trump administration in trade. Consider the only free trade agreement under Trump was to renegotiate NAFTA in a way that would diminish trade. We've never done that before. And President Biden, not a single free trade negotiation underway now a year and a half into his administration. He hasn't lifted all the 232 tariffs. He's resisting a corporate exemption process on 301 tariffs. So no, I think the Biden administration has been an extension of the Trump administration on trade.
Do you think that your Republican colleagues would agree with you that some of these Trump-era tariffs should be removed?
I think some do and some don't, right? So this has become a divisive issue among Republicans when there used to be a very broad Republican consensus that was pro-trade, expanding trade, free trade agreements. That's diminished in all candor. And we've got friction on the other side too, right? Previously, Democratic presidents, whether it was Barack Obama or Bill Clinton, were pro-trade. we've lost that now, and so we've really lost the pro-trade consensus.
So you go out, you take the Pennsylvania train, you go out, there's that road turn near Altoona where the road turns 360 degrees around, the train track goes around, and you end up in Latrobe and you're having a Rolling Rock at a bar. Explain to the people pounding Rolling Rocks at that bar how the new Republican Party is going to make them prosper with foreign trade.
Well, I would point out, so the best economy in their lifetime was also the best in mine, which was 2019. Record low unemployment, strong growth, low inflation, diminishing income gap between high income and lower income people. It was really hard to find anything not to like about where the economy was. That was in response to Republican policies. It's true, President Trump was pushing back on trade, but he had hardly moved the needle in a substantive sense, right? We still have roughly the freest trading environment in 100 years. That guy at the bar with me in Latrobe, his wages were going up faster than inflation. That's not a bad place to be.
How do you break inflation then? Right now, the integrin, he's the only guy I can talk to from Washington who'll get this. On the x-axis, the integrin of a negative real wage, we haven't seen in ages. The thickness of our negative real wage is frightening. What is the Toomey prescription?
So the Fed's got to do its job. It's got to stay this course. With negative real interest rates as negative as they are, I don't think we get there, but the market is doing a lot to help, right? The backup in the bond market, the strength of the dollar in the currency markets, all of that is at least disinflationary, if not deflationary. Meanwhile, we've started to see slight declines in consumer purchases, right? Our big retailers have seen, they've kept nominal growth, but not real growth. So that tells me there's demand destruction.
We never do this. Should we break the rules for the senator?
Sure,
I think we should.
I think we should break the rules.
Is the Fed going to blink?
I don't think so.
Okay, well, this is what I wanted to ask. Do you think that it's worth it for the Fed to not blink, to keep going, even if it means a recession?
The Fed has to stay the course here.
Even if it means recession?
Even if it means a recession. The Fed blew this badly. They had a paradigm that guaranteed that they would be behind the curve, and they were. Now they get it. I don't think this Fed wants to be the Fed that brings back enormously problematic inflation for
How much do your colleagues agree with you? Because we heard Joe Biden saying that a recession is not inevitable, maybe not inevitable. But do people in Washington agree that right now it's preferable to have a recession than to allow prices to continue to climb at this pace?
So that's if it has to be, right? That's my, first of all, I don't think a recession is inevitable. I'd say it's probably a little more likely than not. It could be mild, it could be brief. Unemployment could rise very modestly from really quite low levels that they're at now. But we never get back to really strong growth and really good opportunity unless we get stability in the dollar. We're not there right now. That's got to be exercise number one for our medium and long-term prosperity.
Do you think that the banks, with the financial banking sector really under your purview, are prepared for a Fed that is not going to blink, as so many people seem to believe?
Yeah, I think so. Well, I mean, as you know, there's a rising interest rate environment is actually helpful for a lot of banks. So I'm not sure which ones you're referring to. Obviously, those that are based more on securities trading, you know, it's hard to say, right? They may do well for volume purposes. They'll take their lumps in other ways. But look, that can't be the consideration. We've got to get back to normalizing interest rates, normalizing the inflation level, and then we can have strong growth again.
Andrew Carnegie built a school building at Carnegie Mellon, and he built it with a slanted floor so that if it failed, if Carnegie Mellon University failed, he could turn it into a factory. That was the entrepreneurial spirit of Pittsburgh of long ago and far away. You and I lived the 74, 75 crater that was Pittsburgh. Yeah. Do we need to fear that? Do we need some humility still about manufacturing in America, or have we now become service sector so much?
So you know this very well, but I do think it's worth repeating. America will manufacture more this year than any year in our history. More added value in manufacturing. It happens in with different products. It's less labor intensive, but we are a great manufacturing powerhouse. We will retain that in my view. And Pittsburgh's doing great.
Senator, before we let you go, who do you hope replaces you in the Senate?
You know, either one of these guys. I'd never made an endorsement. No, seriously.
Give him another rolling rock.
There's two great candidates. They are dead tied. I think this ends within a few hundred votes, literally, and either one wins the election in the fall.
Spoken like a true politician.
No, we have really good candidates.
Is it going to be a fair recount?
It is, and to the credit of both candidates, they have taken the view that it's probably a good idea to actually count all the
How
votes.
many citizens are involved in the recount of some? These people nationwide are being abused. My mother was an election canvasser, whatever it was called. How many people are involved in that recount?
I don't know the number, but let me just tell you, I think some of our great heroes have been the people that did their job of whatever party, counted the votes, and went with the outcome they got. That's how the system's supposed to work. That's how it worked in 2020, and it'll work that way in 2022.
Senator, thank you. When you're done with politics, fix the pirates. Pat Toomey is the senator from Pennsylvania.
Thank you.
We're going to come back here. We've got lots more to talk about here. And I think within the politics there, really the one thing we've ignored is the war in Ukraine. It has been, I'm doing a panel on Thursday with Sir Lawrence Friedman, among others, on this horrific war.
It's hard to quantify the grasp for some sort of democratic excellence, and I think that that seems to be the way that it's being painted. This idea of trying to extol a democracy rather than a sort of authoritarian dictatorship, which is basically how this is being framed right now in markets. That has been the focus, the tumult and the difficulty with inflation that is actually forcing the central banks to tighten to the point of possibly crimping growth to a downturn.
Well, we will see, and that will be part of this worry about recession here at Davos, and of course we'll continue to look at the markets as well. Right now, what I would, more than anything, the 5 basis point back up 10-year yield, 2.83%. That's enough for Pat Toomey to finance a world champion Pittsburgh Pirates. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden says he'll review Trump-era tariffs imposed on imports from China that led to a rally in the offshore yuan. The Biden administration has maintained most of the tariffs imposed by his predecessor, but the president has come under pressure from some lawmakers and economists and the U.S. Chamber of Commerce to reduce or eliminate them. President Biden is seeking to reassure Americans about the current monkeypox outbreak at a news conference in Tokyo. The president said it was unlikely to cause a pandemic on the scale of the coronavirus. He said the U.S. has enough smallpox vaccine stockpiled to deal with the outbreak. Beijing has reported a record number of new COVID cases for its current outbreak. That is reviving concerns that China's capital could face a broad lockdown as authorities try to stamp out the spread of the virus. China's COVID-0 approach has become increasingly controversial, leaving the country isolated from the rest of the world. And in New York, police are searching for a man who shot and killed a Goldman Sachs employee on a subway train. Daniel Enriquez was 48 and had worked for Goldman since 2013. Goldman calls the death a senseless tragedy. An increase in assaults on New York's subway system has prompted Mayor Eric Adams to boost the number of officers on patrol. JP Morgan Chase says its net interest income this year should rise 26% to more than $56 billion. That is $3 billion more than the previous estimate. JP Morgan's top execs are set to kick off a high-stakes investor day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Raising interest rates is not going to solve the problem of inflation. We can do a lot more than we're doing. Killing the economy through raising interest rates is not going to be a solution in any time frame. So at least trying to do everything we can globally to increase the supply is going to do more.
I said he was the most important person in this valley. That's because people here are in shell shock over the new globalization. The word that's popping around is deglobalization. I'm not sure about it, but Joe Stiglitz is the one, whether you love him or hate him, who got this debate going. The gentleman from Gary, Indiana, won't let up, will
No, he won't let up, although he does see some benefits to trade and looks to shore up some of those elements to avoid some of the inflationary spiral rather than the Fed. Pat Toomey of the Senate just coming on, the U.S. Senate, saying the exact opposite. The Fed needs to get this under control, and that the Fed put is not going to come into play until we do that.
We welcome all of you here to Davos. It is a windswept Davos. Lisa and I perhaps will land in Oz here Tuesday or Wednesday. The market's quiescent, certainly better than the shock and the panic that we saw last week. We've been doing a lot on politics in international American politics, and we drive that forward with Ed Mills joining us now, Washington policy analyst at Raymond James. Ed Mills, we just had on the retiring senator from Pennsylvania, Pat Toomey. You suggested on the break that he is a lonely senator, critical of former President Trump's trade strategy, and also critical that President Biden hasn't turned it around. You suggest there's a lot of people that like our present trade strategy.
Yeah, Tom, I think if you were to poll all 435 members of Congress, there'd probably only be a handful of Pat Toomeys out there. You highlighted at the beginning, the adjective you used was retiring senator. Pat Toomey, it's because he is no longer kind of necessarily within the middle of his party. And what you've seen on the Hill through the Trump years is the most perilous position was to be in favor of China. Part of the reason why Biden has not removed those tariffs, have kept most of the Trump policies in place, is that you don't want anyone on the kind of, easy on China side to blast you. And so the most bipartisan thing in DC right now is getting tough on China. And I think that's exactly why Biden, in his comments this morning, highlighted military support potentially for Taiwan.
Is free trade dead?
I think it's not dead, but it's different. We are right now, instead of having a conversation about the globalization, as you highlighted, a deglobalization. We are more focused on supply chains versus on free trade. The president is in Asia talking about this new pan-Indonesian kind of partnership. They are clearly not calling it's an economic commitment, not a free trade agreement. You cannot get a free trade agreement passed through a Democratic Congress, and it's very difficult to get it done through a Republican Congress. So free trade is a bit of a four-letter word in DC right now. And I think that's why we see what the president is doing is not pursuing a free trade agreement, but other economic discussions.
To that point, Ed, this morning's comments from President Biden were notable. First of all, they've already been walked back with respect to the U.S. providing military support in some sort of concrete, on-the-ground way to Taiwan. They've walked that back, sticking with tradition. But people are really honing in on this idea of removing tariffs on Chinese goods by the U.S. that were implemented under Trump. Do you think that that will fly, given the sentiment that you just put out there?
Yeah, Lisa, I think I always go back to what is the definition of a gaffe? It's telling the truth in DC. And so while they might be walked back, I do think that the president really wants to send a message to China that there would be a significant price to pay if they were to attempt to invade Taiwan. I think the assessment that I get from almost any person that I talk to in and around the Biden administration is that they do not anticipate that that's something that's close, but they want to send a message of strength. They do think that the invasion of Ukraine and how poorly that's gone for Russia and how much the world's been unified is a warning sign to China, but they want to ramp it up one more level. And so I think that's where kind of the Biden administration is focused on versus kind of trying to kind of send any sort of kind of conciliatory message that we have seen in the past.
Ed Mills, thank you so much with Raymond James here, and something surprising here that we're spending so much time, with the president in China and all that, but the disconnect, Lisa, between an international relations discussion of what's next within the history of free trade in America and the reality that Mr. Mills paints.
I think you're right.
Stunning.
I think that that's a very correct way to bring that up. Basically, free trade doesn't sell in the American population right now. It is political death in the water if you start to argue for free trade. And that is the reason why President Biden has picked up on President Trump's trade policies. So then how do you really free up some of the momentum between countries where you get some of the connections that people are talking about here?
Am I wrong to say what's needed is someone courageous and that we need someone on either party to take a stand and risk losing an election?
I'm not going to argue one side or another. I think that it shows how a lot of the elite in some of the academic thought has shifted away from the population in terms of what they would like to see. And so how do you bring it back? I think that is a question. It's just some sort of balance between the two.
We're getting an international claim to the wind here. I mean, you actually look really, I got to admit, you look really put together here because you did 7 miles today. I mean, I didn't know the band, but I ran so far away. I just ran. I ran all night and day. I ran. I couldn't get away.
Thank you. It could have been The Sound of Music. Instead, it was Flock of Seagulls.
Flock of Seagulls in Switzerland. That works. Why don't you take us out? I gotta work on my hair.
We are looking right now at
on radio. You're lucky.
Yes, indeed. Although they are here to sing.
Oh no!
just lost something due to the wind. I will say, in markets, it's a little calmer than it is here on set.
The bottle of Tang broke.
I will say, we are seeing a reprieve after the longest streak of losses going back to 2001.
Nice data check. Farrell could have done that.
This is Bloomberg.
Welcome back to a special Roland Garros update for Bloomberg TV and radio from Tennis Channel. I'm Jamie Maggio. 2 teenagers advanced to the second round on day 1 in the City of Light. Wonder Kid Carlos Alcaraz eased into round 2 with an impressive opening win over Argentina's Juan Ignacio Londero. The 19-year-old is many people's pick to lift the trophy after his recent victories on the clay in Barcelona and Madrid. He'll face Spain's Albert Ramos Vinolas for a spot in round 3. Earlier, Coco Gauff also got off to the perfect start against Rebecca Marino. After taking a tight first set, the American totally dominated the second, closing out the Canadian after an hour and 21 minutes on court. The impressive victory sets up a meeting with Alison van Oudbank in the second round. And don't forget, you can watch all the action from Jamie Maggio.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Inflation in some places is continuing to accelerate here. I don't think we felt the full implications.
Companies are having difficulty managing an inflation environment.
I still think this is a year or two where the U.S. is going to continue to outperform the rest of the world.
The Fed is tightening interest rates, and that means equities are likely to go down as they have been.
Everybody is now worried about a global slowdown. I am too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From a windy morning in Davos to a windy moment in markets. Good morning. This is Bloomberg Surveillance on Bloomberg Television and Bloomberg Radio. If you are not watching on the screen, Tom Keene is getting manicured as we speak from his hair flying like Back to the Future. John Farrow's off. Lisa Abramowitz and Tom
John
Keene
doesn't,
here.
folks, he should have come because Farrow does not have the hair problem here in Davos.
That was wonderful. Flock of seagulls.
It was good. Yeah, we're having fun with it. And what's so different here, and I knew it would be different than January. I knew it would be different, and every year is different. But I'm thunderstruck of the shift of just the getting here, the getting up the valley, the walking around. It is so, and a lot of people, David Rubenstein and I were talking about it. We could get used to this.
Well, it's a moment that a lot of people don't want to get used to in the markets, and we are seeing a bit of a reprieve. Markets climbing a little bit, holding on to those gains. 30 minutes here till the open in New York, not here necessarily in Switzerland. And a lot of people are wondering, is this it after the worst streak of losses going back to 2001? Yes. There is a feeling of unease that is underpinning this quiet that we see today in markets.
And part of it is when you have the experts that we have come on. We've been really honored at what our team has done to put together the eclectic group today. And let's go back to the very beginning of this Davos Monday. Jason Furman made clear that the path of the Fed is a higher interest rate path.
And this is important.
We all agree.
This is important because if that's the case, and if they go as far as people think, is there a case to be a bull in this bear market? And that, I think, really is the big question for so many investors right now, because underpinning optimism by a lot of investors in the markets is that the Fed will back off.
Quiescent markets this morning, and we have been remiss. We really haven't looked at the equity markets through the morning, and we correct that now with the perspective of Elise Ossenbaugh, global market strategist at JP Morgan Private Bank, and far more importantly, someone who can synthesize in everything from the work on Friday of Michael Ferroli over to what JP Morgan's doing in oil in London, which is extraordinary. I think $120, $150 a barrel. Elise, as you people worked through the weekend to judge the equity markets, did you essentially say the vector still to more pain?
I think we're cognizant that there could be more pain in this equity market. We're not holding out hope that all of a sudden we're going to get a sustained relief rally. I think until we get clarity on the three big sources of uncertainty right now. Those, of course, being Russia, Ukraine, and the implications for the global commodity market, what's going on with China and their COVID-19 resurgence, and kind of the, opposing effects of the stimulative measures the policymakers have recently taken, and, of course, inflation and what the Fed's reaction function is going to look like to that going forward.
Elise, some younger have never enjoyed the debate of whether bonds compete with stocks. In this new environment of higher yields, looking at traditional dividend analysis or even looking at a total return analysis, can bonds compete with stocks?
Bonds are our highest conviction idea right now. When you consider the year-to-date rise in interest rates so far and all of this prevailing uncertainty, it makes a lot of sense for investors to step in and at the very least close that underweight to core bonds that they might be holding right now. I think particularly for U.S. taxpayers, munis are extremely attractive right now. You know, you've got the 10-year muni yielding just below 5% on a tax equivalent basis, and that's what's going to give you the protection in the event that things don't ultimately shake out our way. And I would just add as a final thought that we think the market has already done a lot to price in the degree of Fed hawkishness that they have been communicating. And so it's the kind of trade that we think works in multiple scenarios right now, and you know, an area of the market that we would be prioritizing as a place to deploy new capital over stocks.
How much is that contingent on the Fed pulling back before they reach the pinnacle of the tightening that so many people are saying, at least on paper?
I don't think it necessarily means that the Fed has to pull back on their current plans. When we kind of hash out the different scenarios, entering bonds right now seems to make a lot of sense, regardless if what we know about the Fed right now is going to kind of be it, and ultimately in 2023 they can, you know, either pause or potentially ease a little bit. I think the risk to holding core bonds is that the Fed ultimately has to do more than what they have been communicating to us, because in that scenario, that's where you could potentially see rates rise even further from, you know, the highs that we saw a couple of weeks ago when the 10-year touched around 3.2%. But the risk return profile and that trade-off is something that looks really compelling to us right now. And to the extent that, you know, investors are concerned about the interest rate risk, they might consider other ways that they can, you know, embed more defensiveness in their portfolios, whether it's through the use of structured notes and equities to get some of that participation with the downside protection, or looking.
Look, Elise, I get that. But what concerns me is in IG, you're 13% underwater. In full faith and credit, you're 11% underwater. And I get that people want to readjust and rebuild, but how long is it going to take, given a JP Morgan private bank, just to get total return back to what I've lost in 6 cups of coffee?
I mean, it is really going to depend on what happens with inflation and if the Fed ends up having the ability to kind of change their tune later this year. I think we can kind of reorient as investors, though, and not so much focus on the paper losses or gains you might realize in that asset class, and consider doing something like building out a bond ladder that matches more of the time horizon of your investment, so that you know, so long as those, you know, issuers that you're buying the bonds from don't go under, you can realize that yield to worst that we're kind of seeing right now, or yield to maturity.
Elise, if you have such conviction on duration, why not just buy big tech?
So I think the outlook for big tech, you know, is going to continue to be challenged, because you've also got the earnings component here, right? And a lot of uncertainty as to what's going to continue to happen, not just with supply chains, but also the headline revenue generation. I think given the carnage we've seen in big tech, we would be comfortable lagging back into, or certainly holding some of those higher quality names within the segment. But when we're thinking about, you know, new money, we would prefer to diversify, especially in light of the fact that we know many of investors might still be overweight tech, given the performance dynamics of, you know, the past 5 to 10 years.
Right. Elise, thank you so much. JP Morgan Private Bank scrambling constructively, I would suggest, given some of the market damage that we've seen. What we're going to do right now is what we hope to do each day that we're here, is just pause and give you just windows into some of the themes that we see. The first one, Elise, is without question there's fewer people here, as Dr. Schwab and the World Economic Forum try to rebuild Davos.
And a lot of the bank CEOs have not come either. JP Morgan's Jamie Dimon is speaking at an investor conference in New York. So we are seeing less of that presence, more academics, a number of politicians, I believe German Chancellor Olaf Scholz among them, as well as Christine Lagarde, who made news this morning in a blog post saying that she thinks that we're going to get away from negative rates as soon as the end of September. How do you conflate fiscal policy and monetary policy at a time when inflation is at the forefront in a way that it hasn't been in decades? And I think that that is a new Davos for us here.
What I captured today, which I think this is so important, is the international relations crew is not on the same page with a large body of global middle class. You see it in the elections in Hungary, the primaries in Pennsylvania, and other places. The anger that's out there is palpable, and the people here are scrambling to come up with a theory for that anger.
Well, and we were talking to David Rubenstein, who's on the board of the World Economic Forum, and asking about, is Davos still relevant? And he said people are coming and people are talking, and that has relevance because they have the money and they have the power. And so how much do we try to bring some sort of recognition of this feeling that Davos has been kind of out of touch with the realities that you need capital flowing to certain areas in order to prepare for the new infrastructure? And that's really the conundrum that a lot of people are very aware of here.
I like the idea that a lot of smart people end up here. What I think is interesting, and people conflate all the different tribes of Davos together. The fact is people are here to hear someone like Ian Bremmer, someone like Ricardo Hausman. I mean, essentially there's nowhere else in the world you're going to see Ricardo Hausman but here.
And also there is a feeling that people have not seen each other in person for years.
It's
and this
a plumbers
is actually,
convention.
no, but this is a really important point, because suddenly people realize, wait a second, travel is actually important, and the FaceTime and understanding that connection in a non-Zoom kind of way has power, and that's why we're seeing business travel pick up to some of the pre-pandemic heights, and certainly you get that feeling today.
Al from New Jersey just emailed, and he said it looks more like a hairstylist convention.
Well, maybe for us.
Thank you, Al.
We're trying. Maybe this is a hairstylist nightmare.
Well. For those of you on radio, seriously, you've enjoyed this coverage here from the World Economic Forum. We're going to continue for another 45 minutes, by the way, but the coverage today has been, I think, a bonus round for radio, because they did not have to observe.
Exactly. They didn't have to see that. And so they could focus on markets, and probably they are happy to do that, because we are seeing a lift here as we get some stability in bonds. And what we are seeing right now going into the open is a bit of a fade from earlier, but bouncing around as we look at nearly a 1% gain on the S&P, 39.38 as we head to the open. Bonds up a bit, 2.84% on the 10-year, and the euro strengthening on those Lagarde comments.
That was almost as good as Karen Moscow. That was a hell of a data check.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Ukraine's President Volodymyr Zelensky said Russia's economy should be shut off from the world, and he invited global investors to shift their resources into Ukraine to help rebuild the country. In a video address to the World Economic Forum in Davos, Zelensky said this is the moment when it is decided whether brute force will rule the world. The White House is now walking back President Biden's comments on Taiwan in Tokyo. The president said the U.S. military would intervene to defend Taiwan in any attack from China. That appeared to break the long-standing U.S. policy of so-called strategic ambiguity. The White House later said the president simply meant the U.S. would provide military equipment to Taiwan, not send troops. Pfizer and BioNTech say their COVID vaccine was highly effective and prompted a strong immune response in children under the ages of 5. That's likely to pave the way for infants and toddlers to finally get immunized. The companies say that in a preliminary finding, a 3-dose regimen was 80% effective in children ages 6 months through 4 years old. And Bloomberg's learned that chipmaker Broadcom is in talks to acquire cloud computing company VMware in what would be a massive deal. VMware currently has a market valuation of about $40 billion. An acquisition would put Broadcom into a highly specialized area of software. And President Biden says he'll review Trump-era tariffs imposed on imports from China. That led to a rally in the offshore yuan. The Biden administration has maintained most of the tariffs imposed by his predecessor, but the president has come under pressure from some lawmakers and economists and the U.S. Chamber of Commerce to reduce or eliminate them. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Talking with the Secretary when we get home, I am considering it. We do not impose any of those tariffs. They were imposed by the last administration and are under consideration.
That was President Biden in his Asia tour discussing the tariffs on Chinese goods over in Tokyo during that tour. And it really speaks to this moment. Here we are in Davos, Tom Keene and myself, looking to what is next when it comes to supply chains in particular, especially with some of these areas. Is it boring? I don't think so. It was boring a year ago, but not anymore. Actually, not even a year ago, like 3 years ago, but now it's front and center.
To me, it's much more about technology and the lead America has. Do we maintain that lead?
Well, aren't they part and parcel of the same thing, though, with the chips,
they're very
with the shortage?
Parcel. Like, you know, they're up here now modeling my hair. Like the guy, what was the car movie, you know, Back to the Future, whatever?
This is great.
That's what we're doing. Let us continue now, and this is really important. Every tech company in America has a story, a past. You know Hewlett, you know Packard. They had a garage, and there was a guy named Jobs and Wozniak, and they did whatever they did up in Cupertino. What's important is there was Franklin Antonio. He was the chief scientist at Qualcomm, and he was the heart and soul of the Qualcomm difference. In San Diego, they have done things differently forever, and they've prospered where others have stumbled, including the giant Intel. Cristiano Amon joins us right now, their chief executive officer. How ginormous was Intel the day you walked in the door?
Well, you know, Intel has been an incredible company as they built what is today, you know, the PC. But Qualcomm's story is a little different. Qualcomm's story is a company that actually was always focused on building mobile communications and creating the processing technology that allow you to have a computer in the palm of your hands, and that's our most loved device today, the smartphone. That's what we do.
You won going niche. Is there a risk to moving away from niche?
No, what's happening to Qualcomm right now, and that's one of the greatest opportunities in our history, which is the mobile technology scale is incredible. If you think of the smartphone today, it's mankind's largest development platform. But what the smartphone really is an advanced computational device that is connected. And when we look at digital transformation that is happening across every enterprise, we see demand for technology in other industries. That's what's happened to the company. The company continued to be the company driving the pace of innovation in mobile communications. But the automobile is becoming a connected computer on wheels. We're growing to the automobile space, and then every other industry as they digitally transform.
You fended off an acquisition pitch from Broadcom. This morning, it's reported that Broadcom and VMware are in talks, that Broadcom is going to acquire VMware. Do you expect this to be the future? That in order to have scale and sustenance, you need to consolidate, and do you see that really being the future?
Look, it's really for Broadcom to comment, but the way I look, Broadcom's becoming more of a software company, and with some of the acquisitions they made in the past, and I think VMware is a software company, we're going to the different direction. I think we will continue to be a semiconductor company focused in the growth that we have in this industry, especially at the edge, and we continue to see not consolidation, but convergence of all those opportunities.
How much are you trying to move away from relying on one region, on Taiwan, for example, or some of the other major semiconductor producers as you focus on the hardware?
Lisa, it's a great topic of conversation. I think what we saw over the past couple of years, I think globally, if there is a silver lining, we saw that semiconductors are important. And as chips are going in pretty much everything, even as we saw the shortage of semiconductor, people were buying more goods than services, and there are chips in everything, plus what's happening in the future. We need a reliable supply chain. So Qualcomm, we have done better than some of our peers because we have been diversified since the very beginning. As an example, we are very well balanced between Taiwan and South Korea with Samsung. We also been using chips from global foundries, and 20% of our chip spend is actually coming from manufacturing in the United States. And I think as a general rule, as we think of the importance of semiconductors for the future of our economy, I think we need to have a geographically diversified and resilient supply chain.
But can America participate in that given the massive labor arbitrage, or is that a discussion of 20 years ago?
I think it's a discussion from the past. What's really happening in semiconductor manufacturing is not an issue of labor, it's an issue of scale. But if you look what the United States is doing as part of USICA and the U.S. CHIPS Act, we'll see if it gets, approved by the House. The Europeans actually moving with a very similar legislation called the EU CHIPS Act. The Koreans talking about the Korea CHIPS Act. Just if you look at the United States alone, $52 billion. The Europeans about $43 billion. That is about creating incentives for manufacturing to be built in the United States of Europe. And I think it's possible. The reason I think it's possible is the semiconductor consumption is going to double in the next 5 years. So there's opportunity to build in different places.
What should Apple do with all that cash and the other Apples out there that generate free cash flow every 90 days to choke a horse? You're a competitor. You're a friend, you're an enemy, you're removed. But at the same time, you have to be curious about where all that cash is going to end up.
Well, today we're a supplier of Apple. We provide chips to the iPhones. But at the end of the day, when we think about where most of our future is really to focus on building the platforms, which is driving a lot of the Android premium and high-tier devices, automotive, We recently announced an agreement with Volkswagen. Before that, it was Stellantis to build, a digital cockpit solution, ADAS for assisted driving, and then the broader IoT. And that's what our future is going to be.
Cristiano Amon, thank you so much for being with us, the CEO of Qualcomm, at the center of so many debates right now, having to do with the chip world and really the technology prowess going forward.
Do you think you could come up with a digital solution for hairspray?
Well, what would it be? Digitized hair?
Digitized
know what it would be? We would all be in the metaverse, and we would have perfect hair, no matter what happened with the wind, and we could just have avatars that really like are self-fluffing.
West Coast conversation.
Yeah, well, this is the meta.
You cut me off. I was going to ask him about Padres baseball.
Well,
and can they catch the Dodgers?
I'm crying that I cut that off. Honestly, I will let you have that conversation in the break. Talking about the metaverse, Meta, or Facebook, as you will always call them, has a huge virtual reality tent out there as they try to parlay into that world.
If they change the name of Qualcomm, it'd be un-American.
Coming up, we've got James Athey to weigh in on that, and perhaps not that, but Senior Investment Manager at Aberdeen talking about what's going on. Today, we are seeing yields up, bond price down just a touch. Perhaps the stability giving a bit of a sense to equities as they climb into the open here. About a half an hour, about 30 seconds away, we have 39, 34, 35 on the S&P now, up almost 1%. And the euro, we haven't talked enough about the euro bounce.
You're not going to get my respect till you quote the Dow.
Oh, well, we'll work on that. But I can say that the Dow is coming off of its longest losing streak since 1923, so maybe it'll get a break today. Coming up, we have the markets opening here, or not here, perhaps in New York City.
There.
This is Bloomberg Surveillance in Davos.
Institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live. And it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Moments away from the Open in New York City, we are broadcasting live from the World Economic Forum in Davos, Switzerland, with a Tom Keene who has some hair issues he's trying to work out. We are seeing fewer issues in the market here. We see as they head to the Open, 0.4% gain in the NASDAQ. The Russell 2000 up 0.9%. The S&P up 0.8%. The euro maintaining its gains versus the dollar, breaking a streak that had been highly painful, and talking about parity, moving beyond that to a possible tightening that is sooner than some people expected from the ECB. The 10-year stability there, 2.82% yields up 4 basis points. Yields up as we see a little bit of a risk-on move here, and then in crude as well. We want to send it back to New York. What? Why are you clapping?
Because they're clapping at the New York Stock Exchange.
Oh, dear Lord.
And at the NASDAQ.
Honey, you're in Davos.
I clap, the Chinese Party Congress, they clap differently.
All right, let's head back to New York. Save us. Abigail Doolittle is taking a look at which stocks are on the move. Abigail.
Hi, Lisa. Good morning to you. And yes, lots of stocks here moving on the Open. And on this Monday, we do have a bit of an M&A flare, as you've been reporting. We do, of course, Bloomberg has learned that VMware is considering, Broadcom is considering a bid for VMware. So basically the chip maker takeover of the cloud software company. It would be a huge deal, too, $50 billion. So a real blockbuster. And it suggests that Broadcom is still wanting to diversify its businesses. You can see VMware soaring and Broadcom down about 3.5%. Twitter down 1.5%. That deal saga continues. Elon Musk recently indicated that if 25% of Twitter users were found out to be bots, he would want a 25% discount, or roughly $33 billion. Tesla down 1.3%. This as production delays in China on a one-day basis are going to resume. And then from a macro basis, we of course do have a nice rally continuing last week's rebound for stocks. Maybe folks just needed to see that technical bear market happen, at least briefly, to get some of the dip buyers out. We have Microsoft up 0.7%, a key sector for technology. JP Morgan up 2.8%. This is JP Morgan's CEO, Jamie Dimon, is of course at their investor day. Occidental Petroleum just flipping negative. Oil up not so much, so a little bit of weakness there. And then finally, on monkeypox fears, we have lots of vaccine makers across the board higher, including Sarepta Therapeutics, Tom, right now up 1%. It had been earlier in the pre-market up more than 20%. Let's see as trading goes on if we continue to see bigger bids there for some of the vaccine makers, Tom.
Abigail, thank you so much. I want to vault back to Twitter, Lisa, before we get to James Athey here. I think it's so important, not so much the Twitter erosion from 54 down below 40, but to me, the story here, along with a lot of other stocks, including Qualcomm, is Tesla at 656 is a wow statistic for this month of May.
Especially as you see a rebound in some of the other tech stocks, given the fact that you have this concern of Tesla's linkage to a bid for Twitter. How much does that continue as we move away, perhaps, of the deal going through? I mean, obviously, a big discount being priced into those Twitter shares.
It's fascinating to see how that's going to play. Could you see Elon Musk in Davos?
Yes, I could.
Think about it. Could you see him at the hotel having dinner? How
Although
you doing?
He would do it a little bit differently.
How have you been? Great.
Yeah, I'm
Swell.
sure. All right.
Could you see Elon doing that?
I think that he would do it in a different way. Perhaps he'll do it in the metaverse with hair that doesn't blow around.
That's true. James Athey joins us now, senior investment strategist at Aberdeen Standard, with a very smart note out. And what was important about this research note is the sobriety of now what? James, now what?
I wanted to talk about digital hair, to be honest, Tom. I mean, I'm sadly lacking up there, so I don't suffer with the wind problems that you seem to be. Augmented reality, is that the answer?
Oh, I can see why you want to talk about digital hair. Continue, wise guy.
Mine is on the wrong place on my face. What now? We've moved in a number of markets. We've moved pretty rapidly in a similar direction for a good number of weeks, and we've actually managed to traverse a pretty big distance. I mean, certainly the dollar, is high even relative to history, where it's been considered particularly strong and with good reason. So it's no surprise to me that maybe we take a pause. With Mohamed El-Arian on the show last week, he was talking about a trade, buying certain equities as a trade, high beta equities as a trade. And I don't think he was wrong. Maybe that's already played out. It already looks to me that the bounce in equities is pitiful, really, in terms of magnitude, in terms of, vociferousness. And really, treasuries likewise, they're flirting around 280, which I think is a pretty key level. Technically, it looks like Head and Shoulders has formed here. But more to the point, there's been a huge amount of selling, and yields really can't even get back to 3%, let alone 3%. Right. Given 325-ish was the high in the last cycle, and I think underlying conditions are much, much worse now, economically and in many other ways. To me, it's not a huge surprise if we can't get up there.
But James, to me, what's so important here, and you mentioned it, is the dollar's resilience. When you fit the pieces together to get to a constructive outcome, most people assume dollar weakness. How do we affect dollar weakness?
It's true, Tom. People do associate the two. It's essentially the world needs a weak dollar. At least the financial market feels like it needs a weak dollar to generate this sort of buoyant risk appetite and attitude. And there are some good reasons for that. I think economically, I would kind of disagree. I think a weak dollar is a not particularly stable equilibrium in normal times, because most of the rest of the world is running a huge current account surplus. They're relying on external demand rather than internal demand, and therefore a stronger currency is a big headwind for them. The US does not suffer on the flip side with a strong dollar. It's a consumer, it's a deficit region, and the strong dollar isn't such an economic problem. For financial markets, though, we know the world is a dollar borrower. We know that essentially the world trades as if it's short dollars, and when that gets more expensive, it becomes a problem. And when you've got an environment like this where commodity prices, global input costs are creating all manner of headaches for central banks, obviously a stronger dollar is making that dynamic much worse as well. I still think the strong dollar is the path of least resistance, given that both ends of the dollar smile are in play at the same time.
James, your adjectives are fantastic. Pitiful, really? You're saying this bounce is pitiful. I've been talking all morning. We've been talking about how there's a moment of calm. There's a sense of at least a pause as people reassess, and a little bit of optimism. It sounds like you wouldn't characterize it like that, and you wouldn't be necessarily saying that this is a signal to buy into the equity kind of specter.
I can't speak for others' optimism, because others seem to find optimism at a time where I cannot for one moment understand what it is that they're seeing. To me, the story for bullish equities of the last 18 months or 2 years, certainly post the pandemic, has really been about a number of tailwinds. Fiscal policy's been a tailwind, monetary policy's been a tailwind. There is no alternative to equities. Tech stocks can generate huge profits acyclically, and every single company can maintain these historically wide margins, just further twisting the economy towards owner of capital away from owners of labor. All of those dynamics really seem to be now headwinds. Fiscal policy is a headwind, monetary policy is a headwind, treasury yields are now at 3%. There is an alternative, in spite of the fact that inflation is as high as it is. What we're seeing is that that's hurting margins, that's hurting the consumer, which ultimately will feed back into the economy. So equities 20% off an all-time high, which had some of these pandemic stocks multiplying their share price by the order of 5 or 10 times. Getting back to where we were pre-pandemic, to me, still doesn't really reflect some of the huge underlying economic health problems that we face.
So, James, basically, are you hiding out in the triple leverage all cash fund with Tom?
Not quite. I see value in duration. We've been happy to add duration into weakness. We're still running pretty big flatteners in the US yield curve, because we still think that can work in both environments, right? The front end leads a sell-off and the back end leads a rally. So we love the flattener. We have done since March of last year. And yes, we're in the last knockings of that trade, but we don't think it's done. We do love the dollar, but we've tactically gone to the sidelines there because we had a great run, really. But ultimately, this sort of pop in sterling, the pop in euro, where the stagflation trade-off looks heinous, that really is going to be a selling opportunity for us, a dollar buying opportunity. We're short break-evens at the longer end as well, because we do think that central banks are mandated now to deal with this stuff. So there are still positions that you can have on, but in terms of risk-facing assets, cyclical assets, to me, you're going to get a much better buying opportunity.
Where are you on the 10-year real yield? Quickly here, James.
Yeah, I mean, again, that's moved a long way, but broadly speaking, I'd rather be short than long the 10-year real yield. Normally, the Fed comes and saves the equity market. If inflation's 8%, the Fed cannot save the equity market. In fact, the Fed has to keep pushing until inflation maybe at least has a 4 or a 3 handle, and we're still some way for that. So biased for real yields to move higher.
James Athey of Aberdeen Standard Investments, thank you so much for being with us. I love that. A pitiful rally, and definitely the bulls and the bears. Well, look, honestly, there's a lot to be pessimistic about, and as James was talking about, he doesn't understand where the optimism is coming from, and yet we were just talking with Rebecca Patterson of Bridgewater earlier this morning, or I should say this afternoon, here in Davos, and she was talking about how that if you look at the underlying companies, there's a lot of momentum. So how do you parse those two at a time of so much angst?
I'm glad you bring this up. This is really, really important, folks. Out there somewhere is the bull case. And the bull case is corporations will adjust. The bull case is they will adapt. And if they get decent nominal GDP out, they can keep the shell game going. I'm not saying I agree with that.
Hold on
That's
a second.
a bull case.
I think it's different. I disagree. I think the bull case is that the Fed blinks, and that's the bull case. That's the entirety. Because even if companies do great and knock it out of the water and have, $300 billion of cash on hand, like the 4 biggest tech companies, well then, even still, their shares are getting crushed. So how do you pair the economy and those earnings with the actual share prices?
David Rubenstein alluded to this, and that corporations will continue to move forward. They've done it always when there are these. I'm not even willing to say it's yet a great bear market because we're not out at VIX of 40, but the optimistic stance is corporations will adjust.
Well, coming up, we'll see if Michael Kushma agrees. Global Fixed Income CIO at Morgan Stanley. He does cover on fixed income, at least. He covers fixed income, so I have a feeling that he might be coming with the bear view. Over in the markets, we're losing a little bit, 39.25 on the S&P, the euro of $1.65, and then you've got that 10-year, 2.8%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden says he'll review Trump-era tariffs imposed on imports from China that led to the rally in the offshore yuan. The Biden administration has maintained most of the tariffs imposed by his predecessor, but the president has come under pressure from some lawmakers and economists and the U.S. Chamber of Commerce to reduce or eliminate them. China is trying to offset the heavy impact of coronavirus lockdowns on the economy. Beijing is offering more than $21 billion in tax relief to companies and consumers. The measure includes additional tax rebates to companies and cuts to passenger car purchases taxes. A Ukrainian court has sentenced a Russian soldier to life imprisonment for killing an unarmed civilian. That ends the first war crimes trial in the country after Vladimir Putin's invasion. The Kremlin has rejected allegations that its troops have committed war crimes. And Starbucks is the latest big corporation to pull out of Russia following the invasion of Ukraine. The coffee chain's licensed partner suspended operations at its 130 stores in Russia in March. Now Starbucks plans to end all brand presence there. The company will pay its almost 2,000 workers in Russia for another 6 months. Cars on U.S. roads are as old as they've ever been, according to S&P Global Mobility. The age of light vehicles is now 12.2 years on average. That is up almost 2 months from last year, and the 5th straight year of increases that could complicate efforts to expand the use of new safety and emissions reduction technologies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
It's very clear that people are somewhat insecure. They are in risk-off mode. But our house view still is that there won't be a recession, neither this year nor next year. There will be a slowdown. I think our house view global GDP is 3.3% for this year and 2.9% for next year.
Thomas Gottstein, Chief Executive Officer of Credit Suisse, speaking with Bloomberg's Francine Lacroix earlier, talking about the optimism that their house feels, perhaps amid some turmoil as well. Although I will say, wow. I mean, how would you frame it?
I thought Francine was nice with him. You know, this is the big banking story in the world, and in the halls of Davos, this is, I'll be honest, this is the bank people are talking about.
People want to know what the future looks like for a Credit Suisse. It looks like over in the markets, we are losing a little bit of what we saw earlier, trying to rally after 7 straight weeks of losses on the S&P and NASDAQ, the longest streak going back to 2001. We still are up. We're up 1.2% on the S&P, so fluctuating here back and forth. The dollar losing a bit, and that I think is probably underpinning some of the risk on feel here. The 10-year yield stabilizing, also underpinning some of the optimism. Yields higher, price down just a touch to 0.81%.
Our team is committed here at Davos to keeping you in touch with these absolutely historic markets. It has been just stunning. There's no other way to put it. So what we're going to do is end out our day here with Michael Kushma, hugely qualified global fixed income CIO at Morgan Stanley. We could talk to him across all asset classes as well. But Michael, I really want to focus on what I lived in the late 70s, which was a bond bear market. And that's nothing compared to what we're observing right now. Let's start with retail. What does retail do when they open the envelope at the end of May?
Well, we're seeing a bit of a contradiction between strength in overall retail sales, like we saw in April, the total data, and results of individual companies, which are struggling with higher costs. So I think people are spending money, but costs are rising faster for companies and they make less money. But it's not like there's a lack of spending in the economy.
Okay, but Michael, what about in the retail bond market? They've enjoyed 12% decline, 18% decline in bonds. How do you adapt to something most people have never seen before?
Oh, that's an even more interesting question. It's truly historic of what's happening. Earlier this year, before the equity meltdown, the last 6 to 8 weeks, bonds were doing worse than equities, despite the fact that the economy was decelerating a bit. No, it's all about repricing to normal. And what we're seeing is that after 2 years of historically easy monetary policy, the big shock has been inflation. We all know that back in March of 2021, inflation was below 2%. Fed was projecting, and the market agreed with no rate hikes in 22, maybe a couple in 23, but nothing dramatic. And inflation still struggling to get higher. And that's completely, utterly reversed. So I think the market has been just buttressed by a shock of unprecedented historical proportions with regard to inflation.
But to Tom's point, does the average investor see that yields are higher and they could get more income, or do they see that the price is lower and they have a deeply read statement?
I think we're going to see it as a buying opportunity at some point. That we're not talking about a suddenly reversal of the world that we saw pre-pandemic. Will inflation be a little bit higher? Yes, but your interest rates are a lot higher than they were. And unlike the last sell-off we had in 2018, where yields fell quite sharply, and maybe that yields stay. 10-year treasuries stay over 2.5% for an extended period of time. You actually start earning at least a zero or positive real return, especially on corporate bonds, where yields now in reasonably high-quality corporate bonds are 4.5%.
So at this point, would you be buying duration? I mean, this is really one of the key questions right now as people question whether the Fed has the gumption to actually follow through on a rate hiking plan as set out.
I think that it's premature, but we're getting close. And some of it is about what we saw earlier this month, where we had 10-year treasuries burst over 3% and a very sharp sell, but we couldn't stay there very long, came right back down again, mostly on the back of equity weakness. But this is a good sign in the sense that government bonds and even high-quality corporate bond yields are coming down, even with spreads wider, that they can play a diversifying benefit. They're moving inversely to equities. They're a safe haven, and that's a big deal. So if equities will continue to be highly volatile and bond yields are actually behaving better now than they have in a long time, that will, I think, make people more comfortable that maybe I should own some more duration right now. But I do think we're in a bit of a lull right now, waiting for more information before we can really know what the trajectory of inflation is.
Right. Michael, do you assume in alternative investments, to borrow a phrase, that there's a lot of leverage out there enjoying bond gains or bond losses right now?
I'm not sure about leverage, but private markets do benefit from a less aggressive mark-to-marketing thing, daily mark-to-market. It's more periodic, monthly, quarterly, however it may be, and it looks more stable over time. But in terms of credit markets, I think credit risk, which is happening in the investment grade or high yield market, is happening to private credit as well. It may just be obscured a bit by lack of transparency in terms of what's going on. Now, to be fair, we're not terribly worried about defaults suddenly rising or companies becoming much less credit worthy than in their past. I think the story is still a pretty stable credit story overall.
Michael Kushma of Morgan Stanley, thank you so much for that. Tom, I think that really the narrative of the day is, to the extent that you're seeing a rally this morning, and to the extent that you're seeing bonds kind of regain their relationship with stocks that we traditionally were used to, this sort of inverse relationship, it is not a change from before. It is a pause after a massive move, and people are reassessing in the slew of uncertainty. There is not a whole host of conviction that this is it.
To borrow the phrase of Davos, Are we halfway on our journey of bond losses?
Is that the phrase that you heard? I think you were
on.
collecting some other
People are
phrases
getting
that were
hammered
pretty
here.
interesting.
People are getting absolutely hammered. You know, you buy a bond, you clip a coupon like Bill Gross did starting out at Pacific Investment Management Company in a mailroom or whatever. How many coupons do you have to clip to get back from a 12% bond loss?
Not as many if you're getting 7%, 8% yield on the high yield debt market, which is the reason why Elise Ossenbaugh of JP Morgan earlier was saying this is their highest conviction because they can claw their way out because of how much higher those financing costs are. Right now, if there isn't the credit risk, then how much does this really become the issue? The other real underpinning theme that I really heard today was the dollar and really the question about whether it remains as strong and how strong the world economy can remain if the dollar keeps that up. Today, perhaps we're getting a bit of a reprieve from that as well, with a little bit of softening there.
Kieran from New Zealand emailed in, and he said the #1 lesson of the first day in Davos is I have to read it, folks.
Digitized hair?
Living proof thickening mousse. Is that how you pronounce it, mousse?
It's called mousse, yeah. I think that it would
Living proof thickening
it would just
mousse.
all come up in one sheet, which would probably be worse for everyone watching. I'm just saying, throwing it out there. We'll have a meeting.
Just a suggestion.
Coming up. We have much more on the markets, and tomorrow we will be back, I think, right? We'll see. On Bloomberg and television and Bloomberg Radio. Yeah. This is Bloomberg Surveillance from the World Economic Forum in Davos, Switzerland.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard, In America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.